Max Financial, Axis Bank has approved the acquisition of an additional stake in Max Life Insurance. Yash joins in with more details.
Well, as you rightly pointed out, Axis Bank has approved the acquisition of additional stake in Max Life Insurance. The quantum of the stake is about 0.98%. The Axis Bank stake in Max Life Insurance post this transaction would go to about 19.99% from the current 19.02%. Now, this particular transaction was on expected lines, and this is not as important, but what it leads to will be very important for Max Financial Services. The management had told CNBC-TV18 in the previous interview that once the Axis Bank transaction is concluded, and that's when the restructuring process at Max Financial Services would actually begin, the management expects this 0.98% stake to be acquired in the next 2 to 3 months. Let's assume it to be the first half of current financial year, which means by the second half of current financial year itself, the restructuring process at Max Financial Services would begin. Now, this restructuring would include a merger of Max Financial Services into Max Life Insurance, and through that, Max Life will get directly listed on the exchanges. As we know right now, the entire business is in Max Life Insurance, but what is listed is Max Financial Services, which is the holding company, and a merger or a restructuring would lead to a simpler corporate structure at Max Financial Services.
Okay, all right. Thank you so much, Yash, for joining us with all those details and giving us the analysis as well. So that's about Axis Bank and Max Life Insurance. Let's now put focus on Mishra Dhatu Nigam. Earlier today, we caught up with company CMD Sanjay Kumar Jha. He expects a revenue contribution of 10 to 15 crore rupees from Pratt & Whitney in Q4 of FY25. Ads margins will be around 25% in FY25. Listen in.
Revenue potential for FY25, I'm not saying much. In fact, it will be mostly in the area of certification and qualification of our facility. But I say in the last quarter of FY25, we may see some in the range of 10 to 15 crores worth of supplies. But definitely it will convert into the higher volume right from the next financial year, that is from FY26. So I am finding that definitely it will be around 60 to 70 crores in that range per annum coming from that sector, definitely. Has picking up. The last year we had almost 6% of our turnover from the export. This year we are planning to almost almost increase our export to coming from the 2 times. Last year we have 70 crores. This time we are planning for 150 crores in the export market. Revenue growth last year, the way we have done crossed almost 23%. We have the revenue growth. We will maintain the same momentum this year also. Last year we had around 20% operating profit margin. Maybe it will be coming to around 25 in that range.
Well, Midhani cooling off after seeing a sharp spike, in the intraday session. But the next set of stocks in focus are the gold jewelry companies like Kalyan as well as Senco Gold. They continue to shine after brokerage firm Motilal Oswal initiated coverage on both of these stocks. Mangalam joins us in with more details.
Well, so the jewelry space is in focus largely because of the Motilal Oswal note. But importantly, the underlying trend is the shift from unorganized to organized jewelry. In fact, as of now, organized accounts for nearly 36 to 38% of the industry, the jewelry industry that is. And this number was just 22% in FY19. So Motilal Oswal actually has, pinned the growth of the last 5 years in this sector, and they found out that the overall industry grew at around an 8% CAGR over the last 5 years. In that, the organized business actually grew 18 to 19%, and in that as well, the leaders of the industry, which are Titan, Kalyan, and now Senco, which is recently listed, all of them grew upwards of 20%, and that meant market share increasing. Why is that? Because there is rapid acceleration of consumer behavior towards organized purchase as against buying from their local jewelers in an unorganized manner. And secondly, all these companies are also looking to expand their presence in the country, and a large part of that is happening through franchise route. Now, franchise not only reduces the capital exposure and is better when it comes to return on capital employed, it's also important because it enables faster faster growth for the companies to go ahead and access these stores itself. So all those factors are good for the industry, and as a result of which Motilal Oswal has initiated coverage on Kalyan Jewellers and Senco Gold with a buy rating on each, valued Kalyan at around 45 times FY26 earnings, also Senco at around 35 times. So price targets of between 525 and 1300 respectively, and they've reiterated their buy on the industry leader with a target upwards of 4,100 rupees, valuing Titan at around 65 times FY26 price to earnings.
Okay, all right. So that's about the jewelry space. Some of those names doing well. Titan, though, has come in for some profit booking. With that, we'll do one thing. We'll take your leave on this edition of Midcap Radar with the news that Nifty is where we started the show at. So 22 points lower there. Midcaps are underperforming. 350 points gone there. And banks, they have surged a little bit more. So adding on to those gains, up around 800 points on the Nifty Bank right now. So stay tuned to CNBC TV18. Your stocks when we return. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
These are businesses that have a great market position, in many cases are leaders in what they do. Some have been playing in smaller niches and we need to expand those. These are businesses that when we started this collectively had a market cap of less than $1 billion, and we set a target of each business to get to $1 billion. There are 10 of them. And as many got closer to it, as we often do, we raised that target further and said now we need to grow 5x. So the collective valuation of these businesses as of the last fiscal year is $4.2 billion now, and our target is to get to 17 to 20 billion from these growth gems that we have.
If pockets like banks, metals, pharma, FMCG have a lot of value and technical strength and can be bought even at current prices. I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent, valuations are good, and the money is flowing in because people are coming out of a phase of underperformance. The likes of Power Grid, NTPC, NMDC, ONGC, SAIL, NALCO, I think all of these stocks have a lot of headroom on the upside and can be committed into even at current levels. But I think since a lot of underperforming stocks and sectors are making a comeback, I think fertilizer looks very interesting. Paper looks interesting. The entire auto ancillary space, looks very, very interesting. Sugar has made a very good comeback. Focus on these pockets and I think you will be rewarded with a very good risk reward. I think it's the kind of market where you don't need to apply your mind too much. All you need to do is just to control your emotions. I think that's the kind of bull market that we have been in for the last 6 to 8 months because every single dip has been bought into beautifully. Local and global developments have been handled wonderfully. And I think the market is as strong as ever. As a technician, I always look out for overbought signals or topping signals. But even at current levels of 23,500, I don't see any such signals on the charts. In fact, after what happened on June 4th, I do believe that the market is internally and structurally even more stronger. And I think we are going to see much better days ahead and the best is yet to come.
Mr. Shah, we've got a fair bit of numbers and we've got a sense of...
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we're largely consolidating, you'd have to say, but the Bank Nifty is in a world of its own. It's outperforming with the Bank Nifty up around 2% at this point in time. We have a lot of queries to answer today in the next 30 odd minutes. Let's get going on that. We have Rajat Bose, who's joining in on the technicals. Asta Jain, who is here to talk about all the fundamentals in terms of all of our queries. Asta as well as Rajat, welcome to the show. Well, before we kick off the show, Rajat, wanted your thoughts in terms of the overall texture of the market today. We have a lot of the financials which are doing well. What does that tell you, and what kind of call are you taking on it?
First of all, see, the Bank Nifty is nearly 1,000 points up. A little earlier, it was more than 1,000 points. Now it is 950 points up. Probably the weekly options clearing for Bank Nifty. That's why this kind of, there might have been a lot of short positions. But apart from just talking about short positions in the Bank Nifty, I would say that the leader among the banks, that is HDFC Bank, I have not seen in the recent past it is up by nearly 3%. That might have actually had a big role to play in the Bank Nifty doing so well. Once it has crossed 1650, 1648 resistance level, if it were to sustain, HDFC Bank can move further up, and that way it can pull up the Bank Nifty. Even others like ICICI Bank, even a bank like IDFC First, that is also doing pretty well. So banks are where the action is. On the other hand, when you look at the Nifty, it is in the morning, there was a time when it was 100 points down. But now it is actually very flat. But one thing you must remember that once the Nifty crosses 23,700, then there is every possibility that 24,000 mark might also be scaled. My target will be 24,100 to about 24,150. That is the kind of range that I'm looking at the moment. So as of now, Nifty is flat, but no way there is any kind of a sell signal. While the Bank Nifty, if it manages to cross 51,800, then it would be another blue sky territory till about 53,000.
Oh, okay, all right. So maybe there could be a blue sky territory up till 53,000 for the Bank Nifty. So let's see whether that takes place. Let's get in some queries now. We do have quite a lot of questions coming in from the broader markets especially. We have S. Jaykumar, who writes to us from Tamil Nadu. He holds 1,25,000 shares of Suzlon, which he's bought at 8.65 rupees per share. Long-term investor wants to know what to do, whether he should book his profits or stay invested. Well, not every day do we see such huge gains or somebody sitting with such huge gains and asking about what they should do with their investments. Well, 50 lakh rupees is what his profit is currently in terms of what his investment was on Suzlon. So he got in on the right time and really waited it out. But Asta, let's go with you first. What would you recommend what would you recommend on Suzlon? Do you think that one should probably take some profits at these levels or stay on?
Hi, good afternoon to both of you. Talking about Suzlon, I think one should remain invested in the counter for the price target of 53 to 55. The reason why we are positive about this counter, first of all, Suzlon is a market leader in WTG, that is wind turbine generator, with a 30% market share. So being a market leader, they have certain technological edges also. They have certain technological advantages. And in fact, they are among the leading two EPC suppliers also. So I think all these things makes Suzlon a clear leader in the space in which it is right now. And we have an industry tailwind also, which will be acting in favor of Suzlon going ahead. So I think one should remain invested in the counter because the company has shown turnaround in their financial performance also. So looking after all these factors, we are still positive on the counter and advising hold on this counter with a price target of 53 to 55 at the initial levels.
Okay, so would you recommend exiting once you hit those targets?
I think, yes, if a partial profit booking is advisable because we really need to see how the company is performing. So we are really waiting for Q1 FY25 results also. So in that light, partial profit booking is advisable, but the full review can be taken after seeing the Q1 results of FY25.
Okay, all right. Well, on the technicals, Rajat, how would you approach Suzlon?
See, when we go by technicals, I would say for a long-term investor, we try to find out a moving average that has not been violated. During its journey, say for the last 1 year, if you used 20-day or 50-day moving averages, a number of times you would have been exited from the stock. But if you held on to, say, that is the 200-day exponential moving average, being a long-term investor, then you need not go out because it has never been violated. Currently, it is at 37.65. So if this stop loss is too far down, then the closest stop loss that can be given, that is the 40 mark. If it falls below that, only then exit. Otherwise, had it been a short-term player, I would have said 44.50 should be the stop loss.
Okay, all right. Let's get in another query now. We have KS Rao, who writes to us from Andhra Pradesh, holds 300 shares of South Indian Bank, which he's bought at around 23 odd rupees. He wants to know the prospects of the company and whether he can hold on to these shares for one more year. So South Indian Bank, he's sitting on a profit at this point in time. Buy price was around 23. Rajat, any targets on this one?
Well, it is very range bound. Even on a day when banks are roaring, this stock is just about managed to get past the 50-day moving average. It touched the upper Bollinger Band around, say, 20. In today's session, the high is about 28.68. So I really don't think that one should stay put in this. But if one were to stay put a stop loss below 25, because 26 is your 200-day moving average. And if there were to be any kind of an upsurge and it fails to take out 32, one should book profits there. But I do not put much value in keeping South Bank or South India Bank for long term. Much better. There are much better candidates. Even I would say IDFC First would have been a better choice.
Okay, IDFC First would have been a better choice over South Indian Bank. Let's get in another query. Let's get a fundamental view on South Indian Bank. Astha, what would your recommendation be on that? Would you also have a preference in terms of other banks like Rajat does on the technicals, but you on the fundamentals?
So here I would like to answer Rajat sir's query that why this bank is not performing when whole, banking bunch is soaring right now, because the Q4 results performance was not strong. In fact, they have shown the muted performance on the profitability front, and whatever profit they have shown, that is just due to the provisions. Otherwise, net interest income as well as treasury income was lower in the Q4. So might be the muted financial performance is what market is not liking, and they are seeing not a very strong performance from this counter. But now going ahead, what is a real focus point is that I think some of their stress related issue related to the asset quality is now, they were the legacy issues and they are now resolved. So, and their asset quality has shown a strong improvement. So I think that will be the key focus point of the company and bank, and the bank will be able to maintain the ROA of around 1%. This is what we believe. So just on the basis of those beliefs, we are recommending hold on this counter, although the financial performance was not very supportive, but it will be supportive in the Q1 of FY25. So on that basis, hold is recommended from our side with the price target of 32 to 34 at the initial levels.
Okay, all right. Now we have Sarvana Kumar, who writes to us from Chennai, holds 1,100 shares of GK Paper, which is bought at 410, short-term trader, and wants to know what to do with these at these current levels. Rajat, over to you on this one.
The biggest problem in case of JK Paper is that even on a short-term basis, it has moved up very fast. And now what happened is that there is some profit booking that is happening. If it were to fall below, say, 460, then it will violate the 9-day exponential moving average. If that happens, then only you can get out of it. Otherwise, put a money stop, and that money stop can be at 480. But only today, it is showing some kind of weakness. Otherwise, so far it has been roaring right from the levels of 380 or so. So if one has got into this in around those levels of around say 400 or 380, one can book part profits that way.
Okay, book part profits. What about you, Astha? JK paper?
So we are recommending hold on this counter given the scale of operations this company is enjoying, given the operating profit margin, which are much better than its peer, and a healthy market share in the key paper segment. These all are basic fundamentals which are really the driving factors for this counter, and we are seeing that it has shown a strong rise. Going ahead, what we want to really see in their Q1 of FY25, that how the debt will be repaid. So we really need to see that, and how they will be able to maintain their margins and market share. So I think there is no harm in keeping a hold on the stock till the time results come. So recommending a hold. If everything goes well, then I think price target of 550 to 560 can be attributed to this counter.
Okay, all right. Over 500 odd rupees in terms of a target, almost there. But Madhu Badiga now writes to us from Pune. She holds 100 shares of Power Grid, which she's bought at 189. She's a long-term investor. Wants to know the future prospects of her investments. So she's asking about what she should do with her investments in Power Grid. She's currently sitting on a profit at this point in time. Rajat, do you think that there's more to go when it comes to the technicals?
What I would say here is that the rise in Power Grid has been parabolic, and during the 2 weeks back, the election results week, we saw huge volatility in this. So once you see such huge volatility, you will see some kind of consolidation. And in this consolidation, it should not fall below 300. That should be used as a stop loss. And on the upside, if the that all-time high of Power Grid is not crossed, that is around 348. If that is not crossed, then one should think of booking profits.
Okay. All right. And what about you, Astha, Power Grid?
Looking strong to us, recommending a hold on this counter with the ultimate price target of 350 to 360. Now talking about this counter, they have a strong project pipeline of around 86,700 crore. And in fact, they have given a strong capex guideline also, that is by 2032. So I think that is a very strong of around 2,07,000 crore. So if such a strong guidance is there for the capex, then it will be definitely giving a strong revenue visibility, and it is looking a good long-term bet. So looking after all these, we are recommending a hold for the long-term purpose, although our initial price target is around 350 to 360.
Okay, all right. So that's on Power Grid, but we need to take a short break with the news that we have the Bank Nifty, which is really surging. So up around 2.2% currently for the Bank Nifty. We have the mid-cap index, which is under pressure, so down around 0.6%, with the advanced decline ratio a bit sluggish. Take a break, but a lot more queries lined up on the other side. Stay tuned.
Well, but I think let's get a little bit more into knowing you. I think Nimish,
we'll do a quick rapid fire with you before we let you go and your team go. Okay, let me start with my first question, which is the one business leader that you admire, but you can't opt for Anand Mahindra. So beyond your group, if you want to, if one business leader that you admire.
No, in this case, I would go for Anand Mahindra because of a number of reasons.
No, it's not. I understand it's not an obvious choice. Of course, you admire him, but okay, beyond Anand Mahindra, if you want to choose one business leader that you admire more.
I would say Satya. He's done a fantastic job. And he came in at a tough time. And he's really built a company well and set it up very well for the long term.
All right. What about your favorite sport and what are the prospects of India winning the World Cup?
I have two favorite sports. I can't give you a direct answer on this. One is cricket, of course. That is an all-time favorite. But the second is American football. Because I spent many years in the US as well. So both have a very high degree of passion. Our chances of winning are very high if we play as one team. That's the most important part.
You spoke about you travel a lot. If I want to ask you your favorite destination, whether it's India or abroad, what would you choose? And of course, again, you can't choose Mahindra
My
Hondas.
favorite destination is Spain.
Okay.
Love the Spanish culture, love the joy for life that the people have there. Just a wonderful place.
Welcome back. You're still tuned into Your Stocks. We have with us Rajat as well as Asta to answer all of your queries. Well, let's get in another question now. We have Rajat who writes to us from Tamil Nadu. He holds 4 shares of LIC, which he's bought at 530. He's asking when he should buy more shares. Well, Rajat, since it's your namesake, I'm going to start by asking you this query. Do you think that 1033 is a good level to get into for LIC? And if so, what would you recommend in terms of a stop loss and target price?
Yeah, I would say that the stop loss should be below 950 if it is an investment. And on the upside, immediately we need to see that whether it takes out the range of say around 1080 or so. If it crosses 1080, then the next target will be 1150, and thereafter it might even go up to 1175. Beyond that, it will be a blue sky territory. Let's hope that LIC goes to those levels.
Okay, all right. And what about you? Okay, all right. What about you, Asta? What's your recommendation?
So I think buying on dip strategy can be applied to this counter because first of all, we are positive on this counter for the price target of 1175. Now talking about this counter, BNB margins have really shown a strong improvement. And what we are seeing, that company has introduced 6 new products in the non-par segment. So I mean, the company has now started really focusing on this segment, which is a very strong financial driver for the company. So I think, and they have a leading market position also. And we are expecting a strong APA CAGR to grow at around 11% going ahead. So if I mix all these factors, then it really indicates that the company has a still room to show more upside. And that's why we are positive on the counter, recommending buying on dip as well as hold with a price target of 1175.
Okay, all right. Price target of 1100 is what you said.
1170, yeah. Long-term price
1170. Okay, okay, all right. Well, we have Sonam who writes to us from Chennai. She holds 3 shares of Paytm, which she's bought at 500. She wants to know the future prospects of these new age stocks. Well, it's been a roller coaster ride really for Paytm. From a fundamental perspective, what would you recommend on this one, Asta?
So I recommend book partial profit in the Paytm because the cost price is here lower, which I understand. So I'm recommending booking partial profit, although with the Zomato now coming into the scene. So we really need to see how this deal will happen, because the deal is around $12 billion to 15 billion, and that will really help Zomato. And in fact, if we talk about Paytm also, I think that will really help the Paytm in getting some sort of, in showing some sort of more strong financial performance, because now they can spend more on their marketing. So if they'll get all these amount. So I think it's a long-term story. We really need to see certain things, how the events will take place. But here, since she's making profit, so I think it's better to book partial profit and remain invested partially.
Okay. All right. And what about you, Rajat, Paytm?
When I talk about Paytm, I must disclose that I'm a shareholder of Zomato, which is bidding for a part of this company, the cinema ticketing app of Paytm. Having said that, I'm not giving any buy or sell recommendation on Zomato, but regarding Paytm, I would agree with Asta that part profit booking might be done here. And if it manages to get past, say, 430 or so, then there would be some kind of an upside. But coming close to 425 to about 430, you can expect some selling pressure because it is finding it difficult to actually take out those levels.
Okay, all right. Any other, Rajat, any other new age or newly listed stocks within this new business category that you would recommend, technically?
I would, then I have to say that I would prefer Zomato because I've studied Zomato both fundamentally as well as technically. You can get into that, but otherwise, these new age companies I'm slightly wary of because I prefer high return on capital companies, and generally those companies are pretty old. Like for instance, I like Nestle. So new age companies are not for me, a senior citizen.
Okay, all right. Well, you'd go back into the older kind of companies, and Nestle is probably one of the picks that you have within that space. Is that correct?
Yeah, right.
Okay. All right. Well, Asta, do you share the same view? Maybe you're more towards the older companies, older models of businesses?
So they are evergreen. But in case of new age technology businesses, in fact, even I agree with Rajat sir, Zomato is looking very strong to us. And we are recommending buy. So if not, Rajat sir, I can give the price target for this counter. So we are recommending buy on Zomato. We are liking the business model, the financial performance, the new deal which is going on. Everything is looking very positive for this company. Recommending a buy with a price target of 230.
Okay, all right. Well, we have Rahul now who writes to us from Mumbai. He holds 150 shares of Indus Towers at 212, wants to sell the shares and asks whether he should sell or stay invested. Well, in the news, Asta, you go for this one.
Yes, in the news, and I think right now, because now the stake sale is going on, definitely that will create some sort of a negative impact on the stock price momentum. But if I talk about the fundamentals of this company, their capex is really very elevated, and now they are talking about the rural expansion, more 5G rollout. So purely on the fundamentals of the Indus Tower, we are positive on this counter, but one really need to keep patience because our price target is little higher, which is around 350 to 370. But these are all the long-term price target because right now the kind of news is going on and kind of stick sale is going on. Definitely the stock prices will be in the lower territory. So if anyone has a medium to long-term horizon, then definitely they should remain invested in the counter with a price target of 350 to 370.
Okay, all right. And what about you, Rajat, on Indus Towers?
I think the huge volume that you see in the NSE, that is roughly 805 million, 80 crore shares have been traded today. That is primarily, I think, because of Vodafone PLC, that is Vodafone, that is listed in London. They are selling off their 10% stake. Probably that is the reason why this kind of a huge volume has come in. But despite the fact that one of the erstwhile promoters is getting out of it, it is maintaining itself steady above the 50-day moving average. So I would also put a hold on this, and any immediate target would be, say, about 360 once it starts moving up. And once it goes beyond 375, we can think of new targets. But it's a hold.
Okay, it's a hold. Indus Towers is a hold. Well, on that note, we need to wrap up on the show with the news that we have the Bank Nifty, which is up around 2.5% at the high point of the day. We have the mid-cap index, which is 0.5% lower at this point. The advanced decline ratio, however, has improved as the day has progressed. So let's see whether that sees any kind of further improvement. For the Nifty, up around 40-odd points. Positive consolidation is what we're seeing on the frontline indices. But do remember to email us all of your questions. We'll address them with our experts. Stay tuned. Closing bell up next.
One book that you would meet someone and tell them you recommend to read that one, which one would it be?
I'd recommend a P.G. Woodhouse book, Leave It to Smith.
Okay. One favorite car, if I want to ask you. Again, you can't mention M&M, but beyond M&M portfolio, if you want to choose one car, what would be that?
That has to be M&M. So there is no going beyond that.
I've always seen you, in a very formal attire with tie and everything. But if been asked, what would be your favorite thing? A casual wear or a formal wear?
Casual, of course.
Okay. Why can't you bring that culture into M&M as well? I mean,
We shall take that back for consideration.
Bollywood or Hollywood?
Bollywood.
Favorite picture?
Favorite picture would be Kabhi Khushi Kabhi Gum.
Okay. Finally, one trait that you think a business leader should have or should possess. What would be that?
The ability to connect with people and to be able to understand what their views are. And that's not just the team, but all stakeholders.
The skin can fall prey to a host of afflictions, from the common agony of acne and the persistent itch of atopic dermatitis to the silvery scales of psoriasis, the discomfort of allergies, and the fiery torment of shingles.
Fairness creams, which are a combination of the steroid with this hydroquinone, which leads to not only thinning of your skin but an ashy kind of dermatosis, which gives you this grey skin look. And by the time they come to you, the damage is actually to such an extent that it's almost impossible to repair it completely.
Psoriasis is a chronic inflammatory disease, and it's more than painful. I think it's an uncomfortable disease. Sometimes it's not treated adequately, and it's important that in all cases, first of all, you must have a dermatologist.
This is India's election headquarters.
As the verdict emerges, the markets will react,
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good. It's a positive start for the Asia-Pacific screen as well.
That the group of ministers on rate rationalization should consider the proposal to cut GST on fertilizers and several inputs of fertilizers.
Since the 23,500 put is seeing a fair bit of writing, this is your crucial support zone.
The organized players actually grew at 18 to 19%.
Good going, 30 points higher on the Nifty, 100 points higher on the Sensex.
Mid-caps are the areas where the action was likely to be.
Today, some profit booking has set in. This is after 4 continuous days of gains that we've seen.
The mother of all deal was indeed the Indus Towers block, where the Vodafone PLC has now confirmed that they've sold 18% stake via block deal.
To say the Ministry of Heavy Industries has formed a task force to work towards a National Capital Goods Policy 2025.
They're exempting compensation cess on aerated drinks and energy drinks sold under the unit-run canteen.
There's been some recovery, that too has been sold into, so it's quite a mixed picture, continues to be very volatile.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Hello and welcome to Closing Bell. You've just seen the day that went by. It's been quite a dramatic one, especially when it comes to banks. We are coming to you live from the CNBC-TV18 Motilal Oswal Studios. I'm Surabhi, and with me, Sonia as well as Nigel. Guys, what a day. The bank Nifty is making all the headlines today.
Well, that's right. You know, what comes to mind is the call that Gautam Shah made yesterday on Bazaar, right?
Yeah.
He said that we're at 50,000 and he wouldn't be surprised if we moved to 60,000 in a jiffy. And as of now, in fact, we've done nearly around 2,000 points of that.
I remember him saying that banks will be the trade for the next 2-3 months. And well, I guess it's with the FBI's coming in, I think it's finally showing up.
Oh, absolutely. And today has pretty much been a tug of war between the bulls and the the bears, right? If you look at just the sort of the Nifty screen grab, you'll see that it was up, it was down, it was all over the place. But now, by the end of the day, we're sort of well above that 23,580 mark and led largely by the banks. So big day coming through. And HDFC Bank really is the stock I want to talk about. In the last 24 to 48 hours, a lot of experts are banking on HDFC Bank, starting to perform now. And lo and behold, that's what's happened today.
Absolutely. So let's just quickly run through the screen. What we've got going is a fairly skewed market. You have the Nifty, which is absolutely flat. You have the mid-cap index, which has been underperforming all through the day. And then you have the banking part of the market, which is a story in its own self. So extremely skewed, very diverse and, varied trends that are coming in. So on the large cap screen, let's pull up all the stocks. Of course, Sonia mentioned HDFC Bank, but it's not alone. It's got company, Axis, ICICI, IndusInd, Kotak, SBI. All the top Nifty, 5 Nifty top names, top movers are actually bank stocks. So it's telling you that this is big bulk buying that's happening. As we see. And then the other stocks that are working are Infosys, HCL and Tech Mahindra. There's some green on Wipro as well. So you have the large technology stocks and the large banks. Aside of that, actually, even the large cap screen is really fizzling out. I mean, there's a lot of weakness. There's selling on stocks like L&T. There's selling on auto names, profit taking on auto names. A lot of the consumer stocks are down. So I would have to say that, we need to take this with a pinch of salt. The bank trade is finally working. That's great news for the bulls. But the rest of the market is not in the pink of health, should we say.
Well, that's right. Well, let's get in a trade then on the index. And today, what could be the additional fillip will be that the Nifty Bank will be playing out its weekly expiry. So let's see how the final hour of trade goes. Mitesh Thakur joins us to fill us in with a quick analysis. Hi, Mitesh. It's that sort of a day. You buy the banking names and you ride on them because the private banking names have come back with full force.
Hi, Nigel. Good afternoon. I think both me and Sudarshan also highlighted this in the morning show that it will be the financial names which could lead the rally for the next few days. But, what is more surprising is the strength shown and the outperformance shown by the private banking names. I think that's where some kind of catch-up is happening. We had earlier buyers in Kotak and IndusInd Bank. I think both these stocks continue to do well, look well, and I think the heavyweight, which is HDFC and ICICI Bank, also look good. So broadly, the index or the Nifty will be supported by the Bank Nifty, and now that the Bank Nifty has managed to get past the 51,100 mark, which was my first target for the day, I think we are looking at a test of 52,000, which is where some open interest on the call side is there, and then 52,500. So I think both the round numbers could be tested as well. So stay long and focus more on the financial names.
Okay, focus more on individual earnings. Wanted your thoughts on HDFC Bank particularly and any other stocks that you like, Mitesh?
Yeah. Good afternoon, Sonia. HDFC Bank also has done a very good thing. It's filled a big gap, which was created in the on the day of first quarter results. I think the first target of 1660 is met, but we are looking at the 1700 level, which is where the stock had peaked out in December of 23. That top should be revisited and most likely, crossed. Once we hit 1700 and start getting past that, then we are talking about a fresh all-time high, at least on closing basis, though the intraday high is slightly higher, and therefore we should then keep a target of 1745. So quite positive on HDFC Bank also. On the stocks that I like, I have a buy call on Aarti Industries. It's tapered off today a little bit, but the overall setup is suggesting that the correction is over and the stock could get into an uptrend. So buy here with the stop at 678 and look for targets of 710 to about 715 on the upside. And then I also like, I do like banks, but I've not given a call yet. Axis Bank is one which can be bought afresh. Keep a stop at 1217, look for targets of 1265.
Okay, that's on the big bank trade. By the way, in a bit we'll get Abhishek in as well because he's been crunching some numbers to find the linkage between the enthusiasm that we're seeing in bank stocks today and the fact that we've got this massive bulge bracket block trade that happened, series of block trades actually, that happened in Indus Towers, where Vodafone has sold off a big chunk of their stake. 20% stake sold. I think they own now only about 3% residual stake left, and they've raised a huge amount of money. And the hope is that some of this money, or maybe most of this money, will make its way to lenders, and the dues will start getting cleared up. And I guess that's also adding to the positive sentiment. Mitesh, since I just brought up these stocks, Vodafone Idea has also had a great run, right? It's not been a stock for the faint-hearted, But for the traders who could actually get in, it's worked well. Any advice now on either Indus Tower or on Vodafone Idea?
Yeah, I think, the stock of Vodafone Idea, I think, did a good rally a few months back and then went through a correction from levels of 17 and a half back to about 12 and a half, 13, which is where it met the 200 average and started moving up again. The overall pattern is quite positive. Now, what one should wait for is the stock to be able to break above the previous swing highs, which were made in February. February, we got a weekly closing high of 17 and a half, and the intra-week high was around 18 and a half. So around these levels, you might see some profit booking happening, but my sense is that the pattern suggests that we should be able to get past these levels and then head towards 20.
Okay, well, we will come back to you for more, but look at the banking stocks. ICICI Bank is now up 3.5%. By the way, we're talking about HDFC Bank today, but if you look at the 1 month chart, right, in the month of June so far, HDFC Bank is almost up 15%. So it's kind of started its outperformance at the beginning of June itself. It's been a good month for these private sector banks. But Indus Towers has slumped after Vodafone has sold 18% stake in the company. Nimesh is here to give us the details. Nimesh, over to you.
So, from a stock perspective, the stock actually recovered from the day's low after the block got executed. But in terms of details, there is a confirmation now from Vodafone PLC that they have actually indeed sold 18% stake in Indus Tower block deal today. In terms of buyers, we have a confirmation now that Bharti Airtel has indeed bought 1% stake in the block deal. In terms of remaining buyers, I guess there are multiple domestic mutual funds. One of the leading mutual fund was an anchor investor there. Within FIS, some hedge funds have bought as well. So that's the mix of buyers. I mean, some bit of disclosures might come post-market status, so that's something to track. In terms of size, Vodafone PLC has now raised close to 1.7 billion by selling this 18% stake, and they are going to retain the remaining 3% stake. Now, the announcement from Vodafone PLC very clearly says that the large part of the money will be used to pay off the lenders. Now, just to give a background to this, Sonia, Vodafone PLC had put in close to $1.5 billion in the Vodafone Idea rights issue way back in 2019. And to fund that, they had pledged the entire Indus stake to lenders. So now that this stake has got sold, the money will go back to the lenders. So I guess Abhishek could explain more on who all benefits. But that's the news part, that Vodafone PLC has indeed sold 18%. Bharti bought 1%, and the rest is bought by domestic mutual funds and FIs. And Vodafone PLC will continue to hold 3% stake after today's block deal.
Okay, all right, got it. Nimesh, thanks very much. It's been a day of marquee block deals, and this, of course, was the biggest of the lot. We have Prakash Diwan also joining in. Prakash, great to have you on the show as always. So what do you think? I mean, Vodafone Idea, from the days when it looked like it's absolute lights out to now getting more investors on board. Obviously, the government is already there, and hopes of maybe even tariff increases as we head into the second half of the year. What's your take? You're on mute.
Yeah, sorry. So I think good afternoon to me. I said Vodafone is undergoing, different acts of the story that probably got scripted when the promoter group decided to put in more money after almost saying no for years together, right? So that was the turning point. And if you see the series of events after that, whether it's capital raise or whether it's capital reset, all of that is actually to make sure that it doesn't just play a respectable third player kind of a role, but it actually competes in the market. And that's precisely what's happening or likely to happen going forward. The culmination of this is going to be the tariff hike announcement. So, and I'm expecting that could probably happen as soon as first half of July, given the fact that everybody is gearing to it. And what Vodafone is doing is the virtuous cycle of money coming back, making sure that it goes to the lenders, goes to the lot of vendors who have been waiting. That makes the telecom space as a whole very interesting and healthy to invest into. And I wouldn't be surprised if the next couple of years, as a sector, it actually outperforms. Of course, there are very few listed players in that. But within what we have as ancillaries and as primary players, I think Vodafone is actually triggered off a very positive cycle where things will look up. So quite positive. As a matter of disclosure, I do have this name on my portfolio. But you'll have to be patient with real change to happen. This is more of catch-up. And beyond 18.5 rupees, I think it will need some organic growth to kind of start inching upwards. But it possibly has a better chance than ever before to do that.
Prakash, I'm really tempted to ask you, what was your buy price on Vodafone Idea? if at all you can share.
So interestingly, there are two parts to it. The some which were greed-driven and we got at slightly higher levels, but some were more part of the FPO, which was a absolute stellar call in that sense, because you knew that the stock was available at a decent price, far lower than that 14.5 odds which the Birla Group had invested into, and there was supply. So I think it's just everything's fallen together in place more than anything else, and things are happening much sooner than what most of us would have expected in terms of the revival.
Prakash, hi, afternoon. The star of the last 2 days is undoubtedly the Bank Nifty, right? I mean, just look at it now, almost at 52,000. Who would have thought? And their names like HDFC Bank, Axis Bank is actually up almost 4% now. Do you think the momentum in the banks can continue? What is leading to it? And what's the best way to approach it now?
Good afternoon, Sonia. So, to understand whether this momentum continues, let's understand what you attribute this to. And my sense is, the continuity that's come through, in most of the decisions that have started trickling out of the cabinet and out of the government machinery, and this anticipation of the budget being fairly balanced in terms of being growth oriented and not just populist and all. I think it's very clearly telling you that banks will probably be leading this charge of capital creation. And this time around, for a change, I can tell you there is a huge anticipation, and fairly so, of private sector participation in the capital formation. Till last year we've seen more PSU-driven growth, but now you'll probably have the private sector chipping in. And when that happens, with the kind of growth that we are expecting, you'll start seeing healthy restoration of NIMs and the credit growth, which has been slightly pale. That is kind of giving very good ample reason for people to start looking at banks afresh, and they were underowned. So as one of the biggest components of the market, the ownership levels are far lower, and that's something which is likely to correct. You see the way ICICI Bank and Axis Bank are going towards their highs. I mean, it's primarily driven by the fact that they're still underowned in the larger scheme of things. So that's why you don't see an SBI participating as much today, or a BOB, but it's more of the Indus and the Axis and the ICICI of the world.
Okay, all right. Prakash, request you to hold that thought, and let's get to an exclusive then on the upcoming GST Council meeting. Sources say that the Fitment Committee has called for proposal to cut GST on fertilizer to be thought by the Standing Committee. Timsy is here to fill us in with more details. Timsy?
Well, that's right. What we are given to understand from sources that when it comes to the Fitment Committee nominated by the GST Council, they are actually now talking about the industry demand to cut rates, or to be precise, exempt GST on fertilizers from current 5% to nil. Now, this proposal actually was wriggled around in the Fitment Committee, and what we are given to understand is that Fitment Committee has recommended that this recommendation to reduce the GST from 5% to 0 is actually going to lead to a lot of inversion of duties, blocking of working capital. Thus, it should be appropriate for the group of ministers on rate rationalization to consider this request. Meanwhile, they also said there is a strong case that has been made by the Standing Committee on Chemicals and Fertilizers to reduce this rate. And not just this is on the proposal of the GST Council, rather certain inputs of the fertilizers such as ammonia, etc. Over there also the rates range between 12%, in certain cases it is 5%, in certain cases it is 18%. So there are three sort of brackets that Fitment Committee has recommended group of ministers on rate rationalization on the fertilizer window itself, that this exemption or this reduction in rates should be looked at only holistically after GOM on rate rationalization takes a view.
Okay, so the Fitment Committee is saying that maybe there could be a case to lower rates. Now it's up to the GOM to take that call. Got it, Timsy? Before we let you go, some of the stocks are very excited in the market, casino, online gaming, some of these companies, because of possibility that there could be some rethink over retrospective GST applicability. Can you tell us what's the latest you're picking up on this?
Yes, as you rightly said, GST Council is likely to get a breather for the industry where sectors which paid GST at lower rate versus that applied by GST authorities that are likely to get relief from the retrospective action. GST Council may consider a proposal to not to levy higher GST when lower rate was paid by the industry, and that was a general practice that the industry was carrying out and not just one particular company per se. So GST Council may consider Law Commission's proposal to offer companies relief from the retrospective action for lower tax payout. Council is likely to consider not raising retrospective demands where industry paid lower GST rate in absence of clarity or where the rate was not specifically mentioned in black and white. Also, the amendment to the GST law is likely to not to allow refund of GST or cess arising in cases where higher demands of GST were paid, and now with this amendment there could be a lower rate. So over there no refunds are going to get done, and the amended law is likely, what experts say, could benefit sectors like online gaming, insurance, when it comes to other sectors like foreign shipping lines, foreign airlines, insurance company, etc. So there are many sectors who are likely to get the benefit of this. Just to lay down the procedure, Council is going to introduce Section 11A in the GST laws, which is likely to address this issue. And this is similar to what was Section 11C in the pre-GST regime in the central excise laws. So just replicating that law to be exercised as and when sector-specific the council or the government feels that they would need to bring in amendment so that retrospective cases can be settled. So it is going to ease a lot of litigation is what experts say.
Yeah, no, absolutely. Though I remember this because it's gone all the way to the Supreme Court. The government held that this is not retrospective. The government said that we have merely clarified. You're paying rate GST at a rate of 18%. The actual rate is 28%. We've clarified that. But of course, industry was up in arms because industry practice, as you're saying, was 18%. So, Timsy, thank you very much for that. I guess, let's see if this happens, then maybe some of those outstanding huge GST notices, they'll be put to rest.
Yeah, I want Prakash's view on this. Prakash, maybe the current GST rate, well, it continues at around this 28%. But what could potentially be the relief is the monkey gets off your back. In the sense, these companies have market cap of around 4,000 crores and the notices were close to around 15 to 20,000 crores. They had made no provision. Delta has made no provision whatsoever. So actually, the impact on the books will not be that much. But the problem was investors that sold at 180, 200 rupees odd, they were worried that there is a huge tax implication that is, hovering around them. So how big a relief is it? The company's market cap is around 4,000 crores now. They have cash in their books. They have some land as well. So how would you view it? Because now it could be business as usual if, in fact, this retrospective relief comes about.
No, absolutely. I think from what I can make out from Tipsy's update, this is going to be more of a contingent liability getting off the books. Though there was nothing, in terms of the balance sheet really right now carrying that burden. It also starts letting investors think about what is it that the company can do in terms of growth going forward. It's not just about maintaining the business that it has in the current properties, but it's about whether there is any potential to expand, which had suddenly all come to a grinding halt. So I think instead of the whole matter hanging fire and nobody making anything out of it, this kind of paves the way for the business to grow and the government to start looking at some revenue accretion from future businesses as well. So it's positive, but I'm not too sure, Nigel. We've seen this happen a lot of times. We come to this stage and things don't happen. One of the interesting part of the GST Council discussion, if it's on the agenda, and I'm not sure whether it is yet, would be the taxation on getting gas under the GST ambit. And if that were to happen, I think that's going to be a far more impactful change in the long run. So something like that could probably be very interesting, more than just these companies in the gaming side. But let's see, just a couple of days to go, and we'll get to see what's in store for us.
Okay, well, another pocket that has done pretty well today, Prakash, is this entire fertilizer piece, right? So whether it's RCF, NFL, Chambal fertilizers, all sitting at fresh highs, big gains, 8-9%. Is it just a trending move, a trading move, or do you think there's something in it for investors as well?
So I was waiting for you to pose this question. I think it's essentially a combination of 2-3 factors. One is you have the rationalization that's potentially possible, though it's just 5%, which might not be such a big impact, but it's more sentimental. Anything to lower input costs for the farm, for the agriculture sector, is going to be seen as very positive for the government to continue a line of action going into the next 4-5 years, which might be very favorable. And of course, the third thing is the monsoon is round the corner. This is probably the time where you probably start seeing, the consumption peak out. And this time around, given that a lot of our fertilizer units are gas-based, so the input side is fairly benign. It's like what happened to cement last year when coking coal and all of those prices, input prices came down. You'll probably have better margin realization for most of the bigger players, the ones who have scale. So I think it's a lot of things falling in place, and the market's very rightfully excited. This could continue for the next few weeks till the monsoon really kind of sets in.
Okay, all right. We'll do one thing. We'll take a short break on that note. Prakash, do stay on. We still have about half an hour left for the markets to close for the day. It's a mixed day, actually. Although the Bank Nifty is doing pretty well, the mid-cap index is under pressure. So we'll take a break. When we come back, Mithun Aswath from Kiva Advisors will be with us to discuss more on the markets.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
These are businesses that have a great market position, in many cases are leaders in what they do. Some have been playing in smaller niches and we need to expand those. These are businesses that when we started this collectively had a market cap of less than $1 billion, and we set a target of each business to get to $1 billion. There are 10 of them. And as many got closer to it, as we often do, we raised that target further and said, now we need to grow 5x. So the collective valuation of these businesses as of the last fiscal year is $4.2 billion now. And our target is to get to 17 to 20 billion from these growth gems that we have.
If pockets like banks, metals, pharma, FMCG have a lot of value and technical strength and can be bought even at current prices. I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent, valuations are good, and the money is flowing in because people are coming out of a phase of underperformance. The likes of Power Grid, NTPC, NMDC, ONGC, SAIL, NALCO, I think all of these stocks have a lot of headroom on the upside and can be committed into even at current levels. But I think since a lot of underperforming stocks and sectors are making a comeback, I think fertilizer looks very interesting.
Welcome back. A very, very interesting market at hand. And to discuss it, to talk about the way forward, we have with us now Mithun Aswath of Kiva Advisors. Mithun, thanks very much for joining in. So this big bank trade, this is finally showing up. The question is, is it the real deal? We've had several false starts in the last couple of months. You have banks going up 1 or 2 days and then it kind of fizzles out. But what's your sense? I think the entire market is waiting for the banking sector to take off. Is this it?
Yeah, good afternoon, Surabhi. I think, there's been, post the election results, you've seen, FI has also come back quite strongly. I think over the last 1 week, over $1.5 billion have come into the market. And, this is the pocket where, there's been underperformance, especially in the private sector banks, which we've spoken about. And I think, the rotation is going into pockets where their valuation is comfortable, as well as there's enough liquidity for investors to take positions. So I think this could continue, because if we need the market to move up even further from here, at least at the index level, you need the financials to perform.
Okay, you need the financials to perform, and that's really what's happening right now. But on the other hand, Aswath, you have the mid-cap index, which is coming in for some profit-taking, and the index is down about 400 points. You think it's getting a bit frothy at the top there? And how does one approach it?
Yeah, afternoon, Sonia. I think, you've seen, the mid-caps really outperform over the last couple of weeks. And, I think it's just maybe a bout of some profit booking, because I think there's continued interest there at lower levels in terms of, select stocks. So I would not kind of give it a broad brush saying, mid-caps, are done with. I think you have to be maybe slightly more selective, but opportunities will continue to be there. So I think the growth rates in those companies are higher than the mainline indices. But obviously, one needs to take into account valuations as well. So.
Okay, all right. Hi, Mithun. Good afternoon and good to see you in. Well, normally you give us one stock, and I believe the one that this time around you're looking at is Nesco. Give us the rationale. Why do you find the stock attractive even at current levels?
Yeah, afternoon, Nigel. Nesco is basically a real estate company which owns assets. They own the Bombay Exhibition Center as well as an IT park in Bombay. The good part of this company has been that they have been expanding using internal accruals. They're sitting with close to 1,500 crores of cash and investments, which they're looking to embark upon a 4.6 million square feet expansion in the existing space. So they're going to put up an IT park, hotel, and also expand the Bombay Exhibition Center. So we actually see maybe a tripling of revenues over the next 5 years, because they currently have about 1.7 million square feet under which is operational, which could there's 4.6 of further space being added. So this is something that is a long-term play. It's going to take maybe 3 to 5 years to play out. But at the current market, trying to find value is something that we've been hunting for. And at about 18 times trailing earnings, this doesn't look too bad.
Okay, that's an interesting one. The hunt for value, and Nesco is at least making the cut. And that's really, I guess you're summing up most fund managers' pain, right, Mithun? Because when you have traditional defense stocks trading at 40 times and capital goods companies now trading at 90 times, 100 times, this whole value searches is difficult. So give us some more ideas, some more pockets where you think that it's still reasonable to get in now.
I think I was just hearing about Nigel talking about Fertilizer as well. And we've spoken about this earlier. One of the companies that we spoke about earlier, as well as Mangalore Chemicals and Fertilizer, where valuations are very comfortable. There's an impending merger with Paradeep Phosphates, and the merger ratio is in favor of Mangalore Chemicals shareholders. There's almost a 15 to 20% discount at the current prices. Here as well, I think valuations are on your side, and potentially as a fertilizer policy is also announced, we do think this presents an opportunity for investors.
Sure. Okay, that's on the fertilizer space, coming back after a while. But ahead of the budget, I think there are a lot of these spaces that are coming back into action. But, I wanted your thoughts on the auto sector, because we've had some solid commentary coming from many managements, right? Whether you look at M&M, whether you look at Tata Motors, they've actually come out with a long-term vision of a 15% EBIT margin for Jaguar Land Rover. So they are that confident about the business. Do you think more money can be put to work here?
Yeah, hi Sonia. I think we've held on to Tata Motors for a long time, and we continue to stay put there. I think the local business is already debt free, and they are embarking upon Tata Motors JLR also becoming debt free next year. Also, there was some news today where there's the JLR platform is going to be used for EV vehicles in China with their JV partner Chevy. So I think there are good times in Tata Motors. There's also an impending demerger of the commercial vehicle business as well. So I think Tata Motors, obviously it has moved up quite handsomely over the last year or so. But I think there's still more for investors with a 2 to 3 year perspective with the plans that Tata Motors both on the JLR and the local front have. I think you should stay put there.
Okay, all right. What about a couple of other ideas? Mithun, in the past you've discussed quite a few. I think we discussed Bharat Forge, Everready Industries as well in the past. What else? That was an interesting point you made on the merger ratio between Mangalore Chemicals as well as Paradeep that, there is an opportunity of close to 22%, I think 22-23% as of now. Anything else you find interesting?
Yeah, I think, Nigel, we spoke about Vedanta some time back, and it's obviously rallied very handsomely since those 270, 280 levels. But even now, at around 450 levels, interesting fact is now that Hindustan Zinc has rallied quite sharply. And, Vedanta holds about 65% there. And the 65% stake in Hindustan Zinc is more valuable than the entire Vedanta right now in terms of market cap. So, there are some anomalies in the market. I think Vedanta is also talking about, unlocking their, iron ore, their steel business in the next couple of quarters. That again should help reduce the debt. So I think that counter still looks quite interesting and could still provide upside for investors.
Mithun, since you made it so interesting, I think it'll be a good idea for us to get the promoter on the channel. Let's hope in this week itself, we'll get Mr. Anil Agarwal to answer some of those queries. But undoubtedly, the stock has been a big play on this entire metal melt-up that we've seen. Good talking to you, Mithun, as always. Thanks a lot for joining in and filling us in with your take on the markets as well as on individual stocks. By the way, just take a look at the markets. It's a big, very, very volatile screen out there. We were trading with a gain of close to around 90 points approximately just a short while back. I think it was less than 20 minutes or so ago. And bang, suddenly you have the Nifty Bank actually that's come off 500 points from the high point of the day. The mid-cap index is down more than 500 points as we speak. And you have close to 1,500 stocks that are declining for around 900 stocks that are advancing. So the screen has just done a bit of a U-turn actually. 45 minutes or so ago, things were looking much better. But now you have pull up the advanced decline ratio, you'll see that those you have way more stocks that are declining in comparison to the number of stocks that are advancing. For the time being, slip in a short break. You come back, we'll get a Nimesh. He'll tell us what he's picking up in D Street Chatter.
The entire auto ancillary space, looks very, very interesting. Sugar has made a very good comeback. Focus on these pockets, and I think you will be rewarded with a very good risk reward. I think it's the kind of market where you don't need to apply your mind too much. All you need to do is just to control your emotions. I think that's the kind of bull market that we have been in for the last 6 to 8 months, because every single dip has been bought into beautifully. Local and global developments have been handled wonderfully. And I think the market is as strong as ever. As a technician, I always look out for overbought signals or topping signals. But even at current levels of 23,500, I don't see any such signals on the charts. In fact, after what happened on June 4th, I do believe that the market is internally and structurally even more stronger. And I think we are going to see much better days ahead, and the best is yet to come.
Mr. Shah, we've got a fair bit of numbers and we've got a sense of the businesses as well. But I think let's, get a little bit more into knowing you. I think Nimesh...
We'll do a quick rapid fire with you before we let you go and your team go. Let me start with my first question, which is the one business leader that you admire, but you can't opt for Anand Mahindra. So beyond your group, if you want to, if one business leader that you admire.
No, in this case, I would go for Anand Mahindra because of a number of reasons.
No, it's not. I understand it's not an obvious choice. Of course, you admire him. But, okay, beyond Anand Mahindra, if you want to choose one business leader that you admire more.
I would say Satya. He's done a fantastic job. He came in at a tough time. And he's really built a company well and set it up very well for the long term.
All right. What about your favorite sport and what are the prospects of India winning the World Cup?
I have two favorite sports, so I can't give you a direct answer on this. One is cricket, of course, that is an all-time favorite, but the second is American football, because I spent many years in the US as well. So both have a very high degree of passion. Our chances of winning are very high if we play as one team. That's the most important part.
Investing.
Welcome back. Markets down close to 30 points out. It's been a fairly volatile session, but the star of today has been the Nifty Bank. Let's welcome Nimesh, who joins us on the show to tell us what he's picking up in the street chatter. Nimesh, take it away.
And actually, a very range-bound day of trade as far as Nifty is concerned, but the focus seems to be clearly shifting towards the Nifty Bank, and that's been the relative underperformer in the last many months, right? And now we are seeing a bit of traction in the private bank stocks, and that's backed by some FI buying as well. But again, the big theme or the overarching theme seems to be the large blocks that will shadow a lot of institutional data in today's market as well. 20,000 crores and counting, that's the kind of block deals we've seen in a single day today. Of course, it's largely led by Vodafone, but even there has been some large blocks in some mid-cap names as well. Mid-cap in general has seen some bit of profit booking as well, and that could be one. And the one reason could be that you're seeing a lot of liquidity getting sucked out in this kind of block deal. So maybe a bit of momentum can break in the broader markets. That's been the fear, and that's why you've seen some bit of profit booking there. And within that, I guess there is a bit of profit booking in the PSU names as well in today's market. But the overall feedback is that the trend of this large block deals is likely to continue. So today's number will look very large because of multiple block deals. But I guess from a pure flow point of view, the flow has shifted largely towards private banks from larger FIs.
Oh, absolutely. Are you also tracking Bharti today, Nimesh?
Yes, so just to add to that point, Sonia, while Vodafone Idea is buzzing in trade, Indus recovered from the day's low. Bharti is actually at day's low. In fact, a couple of days back, I had highlighted that maybe the city is anticipating a large block deal in Bharti very soon. Looks like the speculation is there in the market today that there could be a large block deal which can get launched, and hence that stock is marginally under pressure. For the last couple of instances, Singtel has been a seller in Bharti Airtel by a block deal. So need to see if that indeed turns to be true and there is a large block in Bharti Airtel. So that's something to talk about. But in terms of individual names from my list today, the first name is Shell Engineering. Big move on that stock after a large block. Nearly 5% equity got changed hands. I understand a leading domestic mutual fund was a buyer and an FPI was a seller in today's block. Even after today's block, that FPI continues to hold another 5% stake. So that's the first name. The second stock is Ramkrishna Forging. 2 days, the stock is up 15% and on large volumes as well. Looks like the HNI interest is back on that particular stock. And I understand specifically one particular long-only fund is an active buyer as well in Ramkrishna Forging of late. The third stock is All Cargo Gati. Again, the stock has been buzzing off late, but now I understand there's going to be a QIP launch very soon. Some commitment has come in from larger HNIs, but looks like that QIP book can get launched very soon in All Cargo Gati. And the last name is Centec Realty. It's been a relative underperformer in the real estate name, but now you've seen a bit of traction back. I understand a leading long-only fund is an FI is an active buyer as well, and that's the reason why we've seen big moves and backed by large volumes as well.
Okay, got it. So plenty of action and of course plenty of deals in the market. Got it, Nimesh. Thank you very much for the latest, for all the updates. Okay, so there's a bit of a dip that's coming in. The index, the Nifty is now down about 0.25%. Let's take a look at where the declines come in. ICICI Bank has cooled off a little bit. So that's a very sharp dip in the last about 15-20 minutes that we're talking about. L&T is also losing some ground. Lever, L&T, the cut is now about 3%. Lever, Britannia, Nestle, Tata Consumer, a lot of these consumer stocks, they're just extending their declines. Many of them are now heading towards the lows of the session. So this is where the weakness has been. The Bank Nifty also because of the dip on an ICICI Bank. Let's pull up HDFC Bank as well. So a little bit of a cool off from the top. And the mid-cap index obviously is nursing a decline of a whole 1%. So extremely skewed market, very, very different trends coming through. Good time to bring in Mitesh Thakkar. Mitesh, so, what is the sum and substance of this? You've got the bank engine firing, but then the rest of the market is completely fizzled out, really. So what's your final advice, take, and, of course, trades?
Yeah. My understanding is that, basically it's just some sort of profit booking as the bank Nifty has cooled off a bit and the Nifty was anyways not performing today. But as I said, I think if there's a pullback which happens on the index, it could be to about 23,380 zones. As long as that doesn't get taken out, stay long, maintain your long positions.
Okay, and what about individual stocks? What are we looking at?
So I have one STBT, which is Berger Paints. I think the side counters are slightly on the weaker side. So sell here with a stop at about, or a stop at about 502 for STBT trade for a target of around 490. While Coforge is something which can be taken as a BTST kind of a trade. Keep a stop below 53.75 and a target of 54.50 can be looked at.
Okay, all right. Thanks for that, Mitesh. Well, it is a mixed day for the market, no two ways about that. So we're going to go home with losses of around 60 odd points on the Nifty. There was profit booking, and but the Bank Nifty will go home with gains of around 900 odd points. Mayuresh Joshi is joining in. He is the head of research at William O'Neill. Mayuresh, thanks a lot for being with us. I wanted your thoughts on banks, because finally some of these laggards like HDFC Bank are coming back into action. Is it a good time to be buying any of these names, and what would your top picks be here?
Afternoon, Sonia. No, I think we remain constructive on banks and financials as a space at MarketSpace India. So two things happening here. One, obviously, in terms of expectations of loan growth or advances growth is going to continue at a very good clip. Obviously, a lot of these larger banks had their inherent issues as far as deposit mobilization was concerned. But I think it has been a steady state performance in the quarter gone by. And the expectation is that the deposit growth should normalize in the next few quarters as well. So when you talk about the other parameters in terms of cost to income, what the RBI circular has probably done in terms of the unsecured book, the personal lending book, so on and so forth, the provisioning has increased quite significantly. The risk-weighted assets, along with expectations of asset quality pressures, still remaining benign. I think those are positives that one can really work out for. So I think we really like the space as a whole. I think within the large cap names, ICICI Bank, Axis Bank, IndusInd Bank remain on our watch list. Within the PSU universe, State Bank of India, the leadership PSU stock, which has very decent EPS RS ratings as we see it in markets with India, looks reasonable as well. And within the medium-sized banks or the mid-sized banks, Karur Vysya Bank is something that we continue like based on a whole host of parameters that we just discussed.
Okay, all right. Hi, Mayuresh. Good afternoon and good to see you in. What about Voltas? You know, at one point of time, it was losing market share and margins were eroding. Then from those levels of around 750, 800 rupees, in the last 12 months or so itself, the stock close to have doubled. Today, it's down close to around 4%. Things are cooling off a little bit, which I'm not complaining about. But how do you approach the stock at around 1,400 rupees?
Afternoon, Nigel. Yes, I think a solid move. In fact, all these consumer white good companies have done well. So Voltas, Blue Star was one of my top picks, our topics at William O'Neill. We've discussed it quite a lot of times on your shows as well. But I think the entire aspect in terms of how earnings will play out, specifically looking at the heat wave, I think the volume growth probably did not translate in Q4 numbers. Maybe in Q1 numbers, that might just come through. And the other element of their businesses, both Blue Star, Voltas, the EPC part of their business and the electromechanical part of their business as well. The order books are looking quite reasonable enough. The working capital cycle is coming back to normal. You did see some element of spike as far as input costs were concerned, but they mitigated that to a large extent. And to that extent, I think Q1 numbers should be relatively better for these players. I think within the pack, I think Voltas has maintained its market share as far as room air conditioners are concerned. They are sounding a little bit optimistic as far as their Middle Eastern order book and the execution of their EPC book is concerned as well. And so is the Blue Star management. So I think these players might report a better set of Q1 numbers. But Blue Star is something that we continue holding on to our global portfolios.
Okay, all right. So Blue Star would be something that you like. By the way, just checking the market, still the same story, about 1% lower on the mid-cap index. That's been the sort of trend that we've had. Mayuresh, today's profit-taking is actually leading to a little bit of a cool-off, even on some of these high-profile PSU names, PSUs, defense, shipbuilders, etc. Would you be a buyer in any of these dips? If at all you are looking to buy a PSU stock on a dip, which one would it be? And please don't say SBI. I'm putting a caveat there. You can't say SBI.
So you just took my answer away, Surabhi. But yes, I think the defense stocks overheated at this juncture, way above pivot levels as we see it. Is there good enough of tailwinds for the sector as a whole? Absolutely, yes. I think look at the huge order HAL got. Mazgaon, Cochin, the shipbuilders are sitting on revenue visibility for the next 5 to 6 years. They've been executing well. So the numbers have also held up. The only worry that the street Surabhi has is whether 1 or 2 quarters, the execution probably does not go as the way the street likes it. And therefore, I think the kind of base that they've now created, they have to keep on outperforming in terms of superior earnings performance every passing year. So I think 1 quarter of bad execution might actually derail the stocks to a large extent. So I think we are a little bit wary at this juncture because of the late stage bases that they've created. But we are a little bit selective in the broader markets as well. Since you mentioned infra as a theme or PSU as a theme, our take is that within the lower run PSU banks, Bank of Maharashtra as an example is something that we continue holding on to our global portfolios. Our take is that the bank has performed reasonably well as far as balance sheet is concerned. The expectations in terms of management commentary, specifically when it comes to asset recovery in general, looks very, very optimistic. The deposit mobilization has remained strong. And therefore, if you look at the cost to income ratios which are trending lower, the expectations of provisioning, which is significantly higher, gives a good enough cushion in terms of as recovery of assets starts happening, profitability might also start improving along with the other dynamics that you're probably looking at. So yeah, picking and choosing outside SBI, I think Bank of Maharashtra is something that we continue to.
Okay, thanks for that. Well, let's do one thing. Let's take a quick break. We have about 10 minutes left for the markets to close. Let's listen to excerpts from our conversation with Manish Sonthalia of MK Investment Managers. We'll come back.
Overall, I think the direction remains positive. Only thing to watch out for is that for the next 6 months point of view on a fundamental valuation basis, the Nifty 50 looks to traject another 5 to 6% or 5 to 7% at this for the next 6 months. So the main action is going to be in certain sectors, the broader markets as a whole. I'm not talking about the extreme small caps or the micro caps, but yeah, the mid caps and the largest mid caps or relatively, decent market cap mid caps are the areas where the action was likely to be. I think direction remains positive. Overall, I would say that in terms of the IT space, we would reckon that the second half of this year or the first half of next year, clearly there should be some sort of pickup in the IT space in India. Plus now they're actually, converting a lot of their operational creditors dues into equity. So I think, tariff hikes clearly is the need of the hour. We have had it too good for too long. It's around the corner and all the three players must, act in sync. But anything like 10 times EV to EBITDA on FY26 numbers, you'll have some reasonable upside even from these levels. Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average households. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
Well, a lot. If I want to ask you your favorite destination, whether it's India or abroad, what would you choose? And of course, again, you can't choose Mahindra on this.
My favorite destination is Spain.
Okay.
Love the Spanish culture, love the joy for life that the people have there. Just a wonderful place.
And if you recommend one book that you would meet someone and tell them you recommend to read that one, which one would it be?
I'd recommend a P.G. Woodhouse book, Leave It to Smith.
One favorite car, if I want to ask you. Again, you can't mention M&M, but beyond M&M portfolio, if you want to choose one car, what would be that?
That has to be M&M. So there is no going beyond that.
I've always seen you, in a very formal attire with tie and everything. But if been asked, what would be your favorite thing? A casual wear or a formal wear?
Casual, of course.
Okay. Why can't you bring that culture into M&M as well? I mean,
we shall take that back for consideration.
Bollywood or Hollywood?
Bollywood.
Favorite picture?
Favorite picture would be Kabhi Khushi Kabhi Gum.
Okay. Finally, one trait that you think a business leader should have or should possess. What would be that?
The ability to connect with people and to be able to understand what their views are. And that's not just the team, but all stakeholders.
the skin can fall prey to a host of afflictions, from the common agony of acne and the persistent itch of atopic dermatitis to the silvery scales of psoriasis, the discomfort of allergies, and the fiery torment of shingles.
Fairness creams, which are a combination of the steroid with this hydroquinone, which leads to not only thinning of your skin, but an ashy kind of dermatosis, which gives you this grey skin look. And by the time they come to you, the damage is actually to such an extent that it's almost impossible to repair it completely.
Psoriasis is a chronic inflammatory disease, and it's more than painful. I think it's an uncomfortable disease. Sometimes it's not treated adequately, and it's important that in all cases you first.
Welcome back. Well, Indian Metal and Ferroalloys, IMFA, the stock comes up for you on the screen because that long-awaited 221 crores, that's been received. That's in compensation of the Utkal coal block. And now the street will be waiting by, because what the management has maintained is whatever compensation they get, most of it will be returned to the shareholders. So that explains why that stock from the low point of the day has seen a big spike up. The total compensation due was roughly around 370 crores odd. They had received close to around 130 crores earlier. And now this is the remaining amount of around 221 crores odd. It was anticipated that it will come towards the end of March. It didn't happen, but now, in fact, in the month of June itself, it's come about. And Mr. Panda, when he joined us on the channel, said that in this quarter, he's quite optimistic that they'll receive the money. Explains why the stock is up. In fact, the ferrochrome prices are strong. This compensation has come in, and they have an expansion of close to around 40% of their capacities. That's why the stock is holding well.
Okay, that is IMFA, Indian Metal and Ferro Alloys, moving higher, 5% up right now. Well, remember, we were talking about this big bank move and how yesterday in a conversation, Gautam Shah of Goldilocks told us that banks really is going to be the trade for the next 2-3 months. He's expecting higher levels in the bank Nifty and individual bank stocks as well. Check out that view.
I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent. Valuations are good. And the money is flowing in because people are coming out of a phase of underperformance.
Okay, so that was a view on technical. Charts seem to be supportive of a big banking rally ahead. Mayuresh, so you told us about Bank of Maharashtra. Let me now move to the other side, the big blue chip banking part of it. Do you also think that we could be in for some pretty hefty gains? And if you were to buy a blue chip bank stock, which would it be? What's the preference?
So, Surabhi, as I mentioned, on the watch list is a bank like ICICI Bank and IndusInd Bank. I think IndusInd Bank has performed really well so far. What they had set out targets on an annualized basis, they are close to achieving that, both in terms of the retail portfolio touching almost 50-55%. Expectations in terms of their loan growth remaining extremely steady. The NIMs have remained extremely steady as well, and so have the asset quality. So is the asset quality angle as well. So to that extent, I think IndusInd Bank, even from a valuation perspective, plus the expectations of an strong earnings recovery perspective, looks extremely well placed. And ICICI Bank does remain on our radar as well. I think most of the parameters, including expectations that the management probably has as far as their overall book is concerned, and expectations in terms of recovery in NIMs. At some point of time, the rate cut cycle will start at the end of this calendar year, hopefully. And as that starts taking place, the normalization of NIMs should act upon bank balance sheets as a very, very positive, leading to incremental improvement in ROAs and ROEs. So I think ICICI Bank, IndusInd Bank within the large names remain on the watch list.
Okay, before we end for the day, by the way, the market is going to close flat, but don't be fooled by the flat move because there's a lot of volatility intraday and we'll close with losses of around 40 odd points. Today, give and take was a day of consolidation, but as you can see, all those jagged edges on the screen both ways. So there was plenty of volatility, but the star of the show is the Bank Nifty going home with over 1,000-point gain today. But Mayuresh, just a final question from my end. The biggest underperformer this year has been IT. In fact, I was going through the list of top losers. LTI Mindtree tops that list. This year it's down 20%, followed by something like an Infosys down about 3 to 5%. Do you think at any point this year IT would come back in a big way?
So, Sonia, our take is that the second half should see some element of recovery signs coming in for the sector as a whole. And within the space, mid-cap IT has done relatively better in terms of both order wins, expectations in terms of no damage as far as pricing is concerned. Management commentaries to a large extent have remained very, very sanguine in terms of dollar and constant currency revenue growth. And therefore, the additional cost that probably happened on the balance sheet in terms of both salary hikes, outsourcing costs going higher, they have probably now stabilized. Large cap IT, maybe a quarter or two in terms of more stabilization expected to take place. BFSI, retail, manufacturing, the three biggest verticals, and North America and Europe in terms of geographies, expected to come back slowly in the next quarter or two. And therefore, an earnings recovery, specifically in terms of large cap IT earnings, should happen in the second half of this financial year as well. Obviously, that coincides in terms of Christmas furloughs and discretionary decision-making processes as well. But our take is that post Q2, numbers should start stacking up in a relatively better fashion. Infosys, HCL Tech should be kept on your radar.
Mayuresh, what is your view on Sun TV? You know, that stock was absolutely did nothing actually for a few years. And now in the last couple of months, it's come back to the 52-week high. Suddenly the street is talking about that cash in their books, valuations favorable. There's a political tailwind as well because the DMK did fairly well or very well in Tamil Nadu. And, you know, there's an IPL franchise as well. From the day's low, the stock has recovered 3%. What's your view at 770?
Oh, yes, actually, I think all these factors are playing out. And I remember, I think you had coined the term, I don't remember, political stocks, something like that, right? So I think all those elements also playing out.
Fundalytics, fundamental and politics together. Yeah.
Exactly. So I think a lot of these aspects are now getting played out. Obviously, I think they do need to regain their market share in terms of languages outside Tamil. What happens on the OTT platform and their investments that they've probably done? How are they going to recoup at the EBITDA level is something to be seen. And even on the film exhibition business, they've been very, very selective over the last few quarters. So what is the kind of expectations that they're laying out on this front is something to be watched out for. So yeah, I think there are a lot of factors at play, which you have pointed out, which is acting positively. But I think we remain a little bit more selective. I think out of mid-cap stocks, I think infra still remains to be a consensus sector. One story that we like is Pennar Industries out of the mid-cap space itself. Our take is that the pre-engineered business in the US, the order book in India, the execution that they're expected to do, and management commentary surrounding the future outlook seems very, very optimistic. So I think anybody holding on Sun can ride the momentum. Pennar Industries is something that we like out of the mid-cap space.
Today, we were talking about the bank seeing a big move. Axis Bank is actually going home at a fresh high. So that's the one large cap which has is now starting to make its presence felt. It hasn't done much this year, actually. It's up about 10% this year. But today, the stock is at a fresh high, Axis Bank. And there was large delivery-based buying as well last few days. Federal Bank is also at a fresh 52-week high. So keep an eye out on that. But I think we can just wind down for the day because it has been a very volatile day for the market. A mixed day, you'd have to say. The Nifty going home with losses of around 50-odd points. The mid-caps going home with losses of 550 points. And it was very volatile through the trading session. But the star of the show undoubtedly has been the banking stocks. The Nifty Bank today hit an all-time high, goes home with gains of almost 1,000 points. It's now approaching that 52,000 milestone, actually closes just above 51,400. And the big moves really came in the banking names today. So whether it was HDFC Bank, which is topping the charts, Axis Bank, ICICI Bank, Indus, Kotak Mahindra Bank, as Nimesh was also telling us, large institutional buying in a lot of these private sector banking names. SBI as well was not too far behind. On the gainers list, you also had IT. So it would be interesting to see if IT comes back as well along with banks. Infosys, Wipro, Tech Mahindra, HCL Tech all ending in the green today. On the downside though, you had Titan, Maruti Suzuki, Bharti Airtel, L&T. L&T has also been a big laggard this month. It's down about 2%. Bajaj Auto, BPCL, Coal India, Hindalco down about 2% and Divi's Labs as well down about 2%. So all in all, you'd have to say, guys, the Nifty was just consolidating by the end of it around the 23,500 mark, but you can't take your eyes off the banking names.
Oh, absolutely. Best performing side of the market. And one of the worst performing sides of the market today has been actually the CPSE index, which has lost close to 2%. And that's where a lot of profit taking was quite evident. So you got names like BHEL, BEL, REC, GAIL, SAIL, Aircon. You get the drift, basically. It's a lot of PSU stocks, also PSU defense names, because they've been the poster boys, boys and girls. They've been the high flyers, really. So today, on the likes of Garden Reach or a Mazgaon, Hindustan Aeronautics, a lot of these stocks were coming off as well. Having said that, I mean, there'll always be some gainers. Let me actually talk about some of the ones that were moving up on news. Sansera Engineering, where the block trade actually happened, about 5% up over there. Delta Corp, because of all the potential, GST overhang, going away. That stock was up about 12%. But yeah, I mean, day off for mid-cap cool-off after a long time.
Well, that's right, Surbhi. Well, but it was otherwise a good session if you had banks in your portfolio. But otherwise, a couple of large Nifty stocks, well, they ended deeply in the red. High pedigree names. Titan was down for the second day running. Maruti Suzuki as well was under pressure. And Bharti Airtel as well was down close to around 2.5%. So the mid-cap side of things was underperforming today, while we had the banks that were the big outperformers. Well, on that note, we'll wrap up on this edition of Closing Bell. But Markets Forward comes up next.
Have a dermatologist.
This is India's election headquarters.
As the verdict emerges, the markets will react.
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed.
Market consolidates in a narrow range as stocks take a leg down across the board. Realty, PSU and consumer stocks are the big drags, even as financials buck the trend. Mid-caps underperform.
Vodafone PLC sells nearly 18% stake in Indus Towers, leaving it with just 3% in the telecom towers company. Says proceeds from the sale will be used to repay its existing lenders. WAPCO Asia sells over 7% stake in ZF Commercial, and China's Fosun Pharma is the likely seller in Gland Pharma today.
Well, banks see massive buying. Nifty Bank hits a record high with private banks being the biggest contributors. The likes of HDFC Bank, ICICI Bank and Axis Bank gained 2 to 3% each.
Hello and welcome to Markets Forward, your go-to show where we get you all the key data points to gear you up for tomorrow's trading session. I'm Nigel D'Souza. Join me as always, Surbhi Upadhyay. Surbhi.
What a day.
What a day. Amazing.
It's like we have several different markets within the market, right? And we'll talk about that. There's plenty to cover, and we'll get you all the action over the next 20 minutes. And of course, the movers and shakers, all the headline makers, and all the corporate commentary. But first up, the action itself. So let's quickly look at what happened today. I call it a very skewed market, and that's because of the kind of contribution coming in from banks and the underperformance from a lot of the other sides of the market, pockets of the market. So let's actually pull up the final tally and tell you what went on. The Bank Nifty, one of those rare days where you see the Bank Nifty rallying all the way 2% and the Nifty still ending flat. Let's see if we can get both of these. Yeah, so the contrast is very clear. Big move in one of the biggest sides of the market, that's the Bank Nifty, and yet the Nifty underperformed. So why is that? Pull up the Nifty contribution chart and the answer is going to come through. Because apart from a few stocks on the technology side and these large banks that we'll talk more about as we go on, a lot of the other pockets of the market were simply not working out. They were selling in auto stocks, they were selling in a lot of consumer names. Even some of the other big boys like L&T and Reliance, they didn't contribute. So basically it was a very narrow move and largely a move in banks, but a move nonetheless that you can't ignore. The other point was the mid-cap market. Look at the ending on the mid-cap index. It's a whole 1% cut. So Nigel, that's why I'm saying it's a tale of several markets rolled into one today.
Well, that's right. And the Nifty Bank, it did very, very well. Yeah. And it had that element of weekly expiry as well that played out. And that's why in the final hour of trade, it got a little bit volatile. But otherwise, it was a good trading session out there. From the Nifty pack itself, actually, though the Nifty Bank did very, very well, you had a couple of these stocks that were underperformers. Case in point being a Titan. You had L&T that was under pressure, Maruti as well as Bharti Airtel. So these were some of the big losers. So that's what restricted Nifty's up move in today's trading session. And that's why, in fact, the Nifty was under pressure in spite of its largest component. That's the banking names doing quite well. The advanced decline ratio, that tells you why your portfolios may not be looking too good at the end of the trading session. Because all through trade, you had almost, for the entire session, the number of stocks declining were more than the number of stocks that were advancing. And the good news, Surbhi, is that you're not going to wake up to any negative cues because the US markets, both the bond as well as the equity market, well, they are shut overnight. So no shocker coming in overnight.
Absolutely. So it's going to be quiet, at least on the equity front. Of course, oil, by the way, oil prices are still very elevated, and that remained a watch point today. Brent has been trading above $85 a barrel. Let's tell you about today's lineup and all that we have in store for you. We'll start off with the key movers and shakers of the day. Vivek will bring us the lowdown as always. Then we talk about the stock of the day, and that was Indus Towers. We'll tell you all about the mega block trades that were taking place around Indus Towers. Then, of course, we get to D-Street Chatter. Nimesh is going to tell us why Shelly Engineering Plastics was buzzing and why that was an interesting stock to look at today. Last but not the least, we'll dive into all the key events to watch out in tomorrow's trading session. But first, the movers and shakers. And like I said, it's stocks going all over the place on that screen today. Vivek with the latest. Vivek, over to you.
Well, thank you so much for that. Like you encapsulated, just at the start of the show about how exactly, it was the banking pack that outperformed even though the Nifty ended quite flat. Just have a look at the banking pack today and the top stocks. It was actually the private banks that did very, very well. Axis Bank, HDFC, ICICI, especially in the last stock, quite a bit of volatility, but all of them managed to end with strong gains. The next set of stocks, from the broader end of the markets that did very well was the fertilizer pack. Hopes of, GST rate cut or something that aided the up move. And throughout the trading session, they built onto the gains. And this is after a couple of days of good trading sessions as far as the fertilizer pack was concerned. Have a look at RCF, Chambal, Fact, all of these names doing very well in the session today. The other set of commodity stocks that did quite well was the sugar pack. Now, despite an overall slightly muted set of market where advanced decline was weak, have a look at some of the moves that you're seeing as far as the sugar pack was concerned. Balrampur, Chini, Sri Renuka, EID Pari up 11% in the session today. One more stock on the radar, this was Sansera Engineering. There was a large block, but it was a clean out trade from a strategic investor. And after that, the stock ended higher in today's trading session. Sansera Engineering, almost 5% higher, cooling off a little bit after the opening highs. The next stock was Ami Organics. Despite the company doing a QIP at a discount to yesterday's closing, despite that, the stock ended higher today, given the fact that there will be debt reduction is something that the market liked. On the other hand, some of the stocks or some of the sectors that saw quite a bit of selling pressure, one sector especially was the realty pack. The entire realty pack today, barring couple of names saw quite a bit of profit booking, Soba, Brigade, Prestige. In fact, amongst the top 10 losers as far as the NSE 500 was concerned, 5 to 6 of them were from the real estate space itself. The other stock on the radar is ZF Commercial. There was a promoter selling, Wapco selling almost 5%. Stock ended lower by 6% today. And lastly, have a look at the capital goods space today. After a while today, the entire pack saw quite a bit of selling pressure, profit booking seen at elevated levels. Amongst the top drags as far as the Nifty was concerned was L&T, but even the other names like Siemens, Cummins, Kalpataru, KEC, all of them too saw quite a bit of selling pressure today.
Okay, all right. Thanks a lot for that, Vivek. Well, let's welcome our guests. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, and Shrikant Chavan of Kotak Securities, who joins us. Hi, gentlemen. Thanks a lot for joining in. Well, Shrikant, what do you make of the move on the Nifty Bank? We had Gautam Shah, who joined us just yesterday, and he was saying that the Nifty Bank is well placed to rally 10,000 points from 50,000 to 60,000 odd. And in a couple of sessions, we have already done 15% of that move. Where's the Nifty Bank headed?
Yeah, good evening, Nigel. I think, in the medium to long term, yes, definitely we can see the rally of maybe 5 to 10,000 points. But in the near term, I am of the view that based on the overall setup of last 10 days, I mean to say from the day of election results till date, the way the setup is there, I think the Bank Nifty has reached to its extreme levels of 52,000. From here, we can see some consolidation between 52,000 and 51,000, maybe 50,500 on the downside. So 1,500 point kind of consolidation that we can see. And for Nifty also, I think it reached to its extreme levels of 23,600. So before moving towards the next levels, I am of the view that it is going to consolidate within the broader range. Today, you must have seen that almost all the private bank stocks did extremely well, but there was some a short covering kind of momentum was there, and we could see some correction in the near term. That's the overall view. So I'm of the view that if there is any correction around, let's say 23,200, then we should look for adding some long positions on Nifty. And for Bank Nifty, I think 50,500 or 700 is the area where, again, we should look for re-entry.
Okay, all right. Got that. Then 23,200, that's the important mark that Shrikant is looking at. Well, the first stock of the day is Indus Towers. The stock was down close to around 2% after Vodafone PLC sold nearly around 18% stake in the company. The group has raised close to around 15,000 crore rupees to the stake sale, and Vodafone PLC says that the proceeds from Indus Towers stake will be used to repay its existing lenders. Nimesh joins us to tell us what it means for Indus Towers as well as for a couple of other stocks. Nimesh?
Well, it means positive for Indus Towers, but first on the news, yes, indeed, Vodafone PLC has sold 18% stake via block deal today. It was done at the lower end of the price band, around 312, 315, and with that, they've raised close to $1.5 billion. Now, what it means for Indus Towers going forward, the fact that the Vodafone PLC has sold, the free float has gone up, which means there will be addition or the weight increase for passive investors. So both MSCI and FTSE are likely to increase the weight, which would mean that there will be inflows. As per some analysts, for MSCI, the inflow could be as high as $100 billion. And in FTSE, the inflows could be close to $55 million. So net $150 to $160 million of fresh inflow will come into Indus Towers over the next few days, as and when those changes happen. So that's one thing. As far as the lenders are concerned, Vodafone PLC very clearly said that a large part of this money is going to get used to repay the debt or be repaid to the lenders. They will be still left with 3% stake in Indus Towers going forward. So that's what the big deal was. Vodafone PLC indeed sold 18%. Interestingly, from a buyer perspective, Bharti did confirm that they've bought 1% stake. The other buyers include some large domestic mutual funds and some FIs, which includes hedge funds as well. So some bit of disclosures will be interesting. But overall, 18% was sold by Vodafone PLC and 1% was bought by Bharti Airtel.
All right, thanks a lot for that, Nimesh. But Vodafone was not the only big trade that we saw today. There were other large block trades as well. They included Gland Pharma, ZF Commercial, and Sansera Engineering. Gland Pharma shares worth around 1,800 crore rupees change hands in a large trade that we saw. Sources say the Chinese promoter Fosun Pharma is likely seller. ZF Commercial promoter, that's Wapco Asia, also sold close to around 7.5% stake to institutional investors in a large block trade window, which saw close to around 14.45 lakh shares worth around 2,287 crore rupees changing hands. And finally, Sansera Engineering shares, they surged post a large trade, which is likely to be a clean out trade from a set of strategic investors.
Okay, let's talk about banks, which played catch-up in today's trade in a big fashion. The Nifty Bank hit record highs, with the private banks being the biggest contributors. Abhishek has more details on the valuation picture of large private banks. So the big move finally started, Abhishek. What do the valuations say now?
Well, post-elections, Bank Nifty, as of yesterday, had slightly underperformed the Nifty. So if you take a look, as of yesterday, post-election, Nifty was up 7.7%, while Bank Nifty was up only 7.5%. So there was a gap with respect to the gains seen on these two indices. However, today, while Nifty was flat or a slightly decline of 0.2%, Bank Nifty was up about 1.8, 1.9% in trade today. So Bank Nifty has seen its valuations change on a price to book value multiple, so from 2.4 times that it was as of 4th of June to right now about 2.5 times. But there has been a huge change with respect to large lenders who have seen massive gains from election to now. So if you take a look, the top gainers from election to now has been SDFC Bank, Indus Bank and Axis Bank, all of them who have surged about 8 to 12% from election to now. Now the big picture on valuation, if you take a look, SDFC Bank, that valuation was below Kotak Mahindra Bank as on the election day. But today, with the rally that you have seen in SDFC Bank's valuation is slightly expensive or slightly better than that of Kotak Mahindra Bank. So all the top three private banks, that is SDFC Bank, ICICI Bank and Kotak Mahindra Bank, on a one-year forward price to book value trade in the range of 2.5 times to 2.75 times. Back to you.
Okay, all right, Abhishek, got it. Thanks very much for putting that valuation table up there for reference. So yes, valuations are inching higher as the buying has really become in large blue chip banks. Let's move on and talk about the other big story of the day. Fertilizer stocks like Chambal Fertilizer, RCF, FACT, all of them surged between 5 and 7%. We are learning from sources that the Fitment Committee has recommended further deliberation over proposed GST cuts on fertilizers, as a blanket exemption could lead to duty inversion and blocking of capital. Timsy is joining in with the latest on this story. So Timsy, even the thought, the prospects of some sort of a GST cut on fertilizers, that really excited the stocks. So what are you picking up?
Well, that's right. What we are given to understand from sources that when it comes to the Fitment Committee nominated by the GST Council, they are actually now talking about the industry demand to cut rates, or to be precise, exempt GST on fertilizers from current 5% to nil. Now, this proposal actually was wriggled around in the Fitment Committee, and what we are given to understand is that Fitment Committee has recommended that this recommendation to reduce the GST from 5% to 0 is actually going to lead to a lot of inversion of duties, blocking of working capital. Thus, it should be appropriate for the group of ministers on rate rationalization to consider this request. Meanwhile, they also said there is a strong case that has been made by the Standing Committee on Chemicals and Fertilizers to reduce this rate. And not just this is on the proposal of the GST Council, rather certain inputs of the fertilizers such as ammonia, etc. Over there also the rates range between 12%, in certain cases it is 5%, in certain cases it is 18%. So there are three sort of brackets that Fitment Committee has recommended group of ministers on rate rationalization on the fertilizer window itself, that this exemption or this reduction in rates should be looked at only holistically after GOM on rate rationalization takes a view.
Okay, got it, Timsy. So that's on fertilizers. Now, a stock like Delta Corp was also very excited today. And that's because I think you're also picking up something on the retrospective applicability of the GST tax or the GST rate, right? So can you tell us what is happening here on this front?
Yes, as you rightly said, GST Council is likely to get a breather for the industry, where sectors which paid GST at lower rate versus that applied by GST authorities, that are likely to get relief from the retrospective action. GST Council may consider a proposal to not to levy higher GST when lower rate was paid by the industry, and that was a general practice that the industry was carrying out, and not just one particular company per se. So GST Council may consider Law Commission's proposal to offer companies relief from the retrospective action for lower tax payout. Council is likely to consider not raising retrospective demands where industry paid lower GST rate in absence of clarity or where the rate was not specifically mentioned in black and white. Also, the amendment to the GST law is likely to not to allow refund of GST or cess arising in cases where higher demands of GST were paid, and now with this amendment there could be a lower rate. So over there no refunds are going to get done, and the amended law is likely, what experts say, could benefit sectors like online gaming, insurance, when it comes to other sectors like foreign shipping lines, foreign airlines, insurance company, etc. So there are many sectors who are likely to get the benefit of this. Just to lay down the procedure, Council is going to introduce Section 11A in the GST laws, which is likely to address this issue, and this is similar to what was Section 11C in the pre-GST regime in the central excise laws. So just replicating that law to be exercised as and when sector specific the council or the government feels that they would need to bring in amendment so that retrospective cases can be settled. So it is going to ease a lot of litigation, is what experts say.
Yeah, that's the hope. Timsi, thanks a lot for joining in and filling us in with all of those details. Well, Mayuresh, what do you make of this pack? You know, the online trading stocks, well, they have got absolutely bombed out. Delta is less than half of what it was 18 months or so ago. So would you look to buy into this if they're going to get relief on the retrospective basis? Then will you think that, you know, with the kind of balance sheet they have, the land bank they have, and they have a niche, would you bet on the stock? And also, if you could give us a quick view on any fertilizer name that you like.
So Nigel, I think if this is believed to be true, I think it will be a positive, because I think where the stock is now in terms of price, I think the worst is probably now getting penciled in terms of everything that the stock has gone through, retrospective tax, what happens in terms of the current tax regime, so on and so forth, including a player like Nazara Tech as well. So to that extent, again, I think it will be a big relief for players like this. But the big question is if. So I think it's really a punt that you're probably taking at this juncture, if you are taking any. And therefore, I think it becomes a high risk, high reward kind of a scenario. But I think the worst is probably priced in stocks like Delta and Nazara Tech. As far as the fertilizer pack is concerned, I think 2-3 things apart from what Timsi mentioned. I think one, with expectations of good monsoons around, expectations of decent volume growth is expected to take place. What you're actually looking at in terms of farm gate prices, ammonia prices have shot through the roof. So I think a lot of ammonia producers like RCF, like Chambal, will definitely benefit because prices at the end of June or in the month of June have actually been far, far better than the previous few months as well. The working capital cycle has got reduced, and with expectations in terms of some budgetary proposals still expected to continue for the sector as a whole, specifically in terms of DBT as a measure, the entire cash conversion cycle probably reduces. And third, I think integrated players will also benefit with lower input costs, specifically phosphoric acid prices. So apart from the factors, I think these factors also probably might aid out. RCF, Chambal might actually continue their momentum.
Okay, all right. Got that, Mayuresh. Thank you very much. And Shrikant, good to have you on the show as well. Thanks for joining in and giving us perspective on the market and the individual stocks we've discussed. Well, let's move on with that and quickly get you the latest corporate commentary that we picked up today. In our corporate corner, we have Mishra Dhatu Nigam and LIC Housing. The management of Mishra Dhatu Nigam, or Midhani as the company is called, tells CNBC-TV18 that supplies to Pratt & Whitney have begun. The company anticipates a potential revenue of 15 crore rupees in the fourth quarter of FY25 and 60 crore rupees in FY26 from Pratt & Whitney. Further, the company guides for 23% revenue growth with margins around 25%. Meanwhile, the company's order book stands at 1,700 crore rupees.
Well, next, LIC Housing says that it had earlier disbursed 42,000 crore rupees under the Pradhan Mantri Awas Yojana and expects the scheme to be launched in a month's time. They also guide for AUM growth of 10 to 12% with a net interest margin of 2.7 to 2.9% for the coming fiscal, while the gross NPAs will be around 2%. Well, on that note, we'll take a short break. You come back with a popular segment, D-Street Chatter, along with all the top market events you need to track. Stay with us.
20% of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Welcome back to Markets Forward. Well, as promised, it's time for our special segment, D Street Chatter. Nimesh joins us to get us an insight into D Street Chatter. Nimesh, what's on your radar?
Hi, Nigel. A day of consolidation on the Nifty, but it was the Bank Nifty which actually outperformed thanks to some big buying interest in the private bank names in today's market. But in terms of individual stocks, the first stock is Shah Engineering. Big move on that stock on large volumes. There was a large block, 5% equity got changed hands. I understand a domestic mutual fund was a buyer and a leading FPI was a seller. Even after today's block deal, the FPI will continue to own 5% in Shell Engineering. The second stock is Ramkrishna Forging. That's been buzzing off late. In last 2 days, the stock is up 15%, large volumes as well. I understand the leading long-only fund is an active buyer in Ramkrishna Forging, and hence a big move in that stock. The third stock is All Cargo Gati. Well, the stock has been consolidating off late with a positive bias. Now I understand there's going to be a QIP very soon, and the company has got some commitments from some larger HNI, so that's something to track there. And the last name is Suntech Realty. Well, the entire real estate name saw some profit booking. Suntech actually bucked the trend and was higher in trade on large volumes. I understand the leading FI fund is an active buyer of late, and hence a big move in that stock as well, backed by FI buying.
Okay, all right, Nimesh, thanks a lot for that. And before we wrap up, let's get you all the key market events that you need to track for tomorrow's session. Sonal Bhutra joins us to help us out with that. Sonal.
Thank you so much for that. Let me start with some of the domestic cues and a lot of stocks that will be in focus tomorrow. In terms of Anman General Meeting, there are a couple of these names that you should be on your radar. Himadri Specialty Chemicals, there's Rallis India, India Mart, Home First Finance and CI Automotive, to name a few. 2 stocks will be going ex-dividend as well, eMudra and L&T. RBL Bank and Utkarsh SFB will have their investor day as well. And tomorrow at 11 a.m., we'll have some comments coming in from RBI Governor Shaktikanta Das as well. It will be the inaugural address at College of Supervisors, Mumbai. And in the global events, we'll have the interest rate decision in UK and some of the macro data that will come out in the US markets as well.
Okay, all right, got that. Thanks very much for that, Sonal. So lots to watch out for tomorrow as well. With that, it's a wrap on this edition of Markets Forward. Many thanks for watching. Do stay tuned. We'll be back after this break with more news and updates.
Now it is contributing 16% of incremental global GDP.
Now we're looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Hello and welcome to Business 360. I'm Arundhati Ramnan and these are the top headlines that we're tracking for you this evening. Sensex and Nifty consolidate after hitting record highs in early trade. Mid-cap see a sharper sell-off. All sectoral indices end in the red, barring financials and IT. Block deals worth 25,000 crore rupees on Dalal Street today as promoters and foreign investors cash in on the high valuations. Vodafone PLC offloads 18% stake in Indus Tower. WAPCO Asia sells over 7% stake in ZF Commercial Vehicle Systems. Gland Pharma's Chinese promoter sells over 6% stake.
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court.
US government's case is misguided and we will fight it in court, says Adobe CEO Shantanu Narayan. This comes just a day after Biden administration sued Adobe for allegedly violating consumer protection laws with hidden termination fees. That's a CNBC TV18 exclusive. Nvidia surpasses Microsoft as the most valuable public company in the world. Shares of the semiconductor maker are up ninefold since 2023. This is the first time a company other than Apple or Microsoft has held the top spot in the last 5 years. The GST Council will meet this Saturday for the first time since Lok Sabha elections. Industry experts say that the Council may consider quashing retro tax notices for certain sectors, including online gaming. Union Ministry for Heavy Industry sets up a task force to formulate a new capital goods policy. Sources say emerging sectors like artificial intelligence, robotics likely to get a leg up. India's Internet and Mobile Association moves the Supreme Court against the government's new self-declaration portal for advertisements, warns of severe impact on the ad ecosystem. Advertising industry bodies also contemplate moving the top court. A report by the United Nations Human Rights Office says Israeli authorities are responsible for war crimes in Gaza. The report also condemns crimes against humanity by Hamas and other armed groups. At least 17 people have been killed in refugee camps in the last 24 hours, according to Hamas officials. Pyongyang rolls out the red carpet for Russian President Putin on his first North Korea trip in 24 years. Kim Jong-un says ties between the two nations are entering a period of new prosperity. Putin thanks Kim for his unwavering support on Ukraine. Straight to the market action of the day. Sensex and Nifty hit record highs in early trade, but the gains could not be sustained, with the Nifty ending in the red and Sensex ending marginally in the green. Mid-cap saw sharper cuts, but the Nifty Bank Index was an outperformer. In fact, barring financials and IT, all sectoral indices ended in the red. Sonia Shenoy is here with all of the action from Dalal Street. Sonia?
Well, today was a mixed day for the market. The Nifty ended with losses of almost about 40 odd points. It was quite a volatile day as there was profit booking in the last hour of trade. The mid-caps were under pressure as well, going home with losses of around 1%. But the star of the show in the last couple of days has been the Bank Nifty, and today was no different. The Nifty Bank hit an all-time high today, crossing that 50,000 milestone a couple of days ago and almost hitting that 52,000 milestone today as well. The laggards of the past, like HDFC Bank, have come back in full force. In fact, today as well, HDFC Bank was one of your big gainers. It's up almost 15% in the month of June, was the biggest Nifty gainer today, followed by Axis Bank, ICICI Bank, Indus and Kotak Mahindra Bank. On the downside, you had laggards like Titan, L&T, Hindalco that were the big losers. Bharti Airtel, BPCL, Bajaj Auto were a couple of other stocks that came under pressure. So all in all, you'd have to say, yes, a mixed bag in the market. Mid-caps were under pressure, but the Bank Nifty was the star of the show.
All right, Sonia, many thanks for those details. And speaking of the market, Dalal Street witnessed a rush of block deals worth 25,000 crore rupees today as promoters and foreign investors cash in on high valuations. Hormaz Fatakia joins us now with the details. Hormaz, a slew of block deals on Dalal Street today.
The trend has been continuing all through, as we have seen so far in this year, and today was no different. As many as 5 large block deals worth over 25,000 crore rupees took place on the street all through the day. And start off with the first one, that is Indus Towers, and that was the biggest among them all. And that is where 24% equity worth almost 20,000 crores changing hands in that transaction as well. So Indus Towers was the one where Vodafone PLC was the seller in this transaction. They mentioned that they sold 18% equity worth 15,000 crore rupees. Now they will use these proceeds to repay the lenders that they have, that Vodafone PLC has, and post this stake sale, they are now left with 3% stake in Indus Towers. Remember, they had around 21%. Now they've sold 18% in this transaction. That was a confirmation of our news break from yesterday as well. The other block deal that took place was in ZF Commercial Vehicles, where around 7.5% equity changed hands in the transaction. That was around 2,300 crores was the deal value, and there as well the promoter Wapco Asia was the one that sold 7.5%. We had reported that they planned on selling close to around 5% of the equity there. And they said that they sold this stake to increase the ZF Group's flexibility for growth. Now, as of March of 2024, Wapco Asia had a 75% stake as well. The other one was in Gland Pharma. That was another one, 6% equity changing hands, close to 1,800 crores there as well. Fosun Pharma, according to sources, is likely to be the seller, which is the promoter entity. They have sold stake before as well. And as of the March quarter, they had close to 57.8% stake in Gland Pharma. So that was one of them. Sansera Engineering was the other one, 62.5 lakh shares changing hands, 750 crores was the deal value. The stock reacting positively to this transaction, ending at a record high in today's trading session. And lastly was AU Small Finance Bank, was around 2% equity, but was close to around 860 crores that changed hands. The buyers and sellers are not immediately known, but it was a slew of block deals today on Dalal Street. There are almost 25,000 crores in the bank. Thank you.
Absolutely. It was block deals galore on Dalal Street. Thank you so much for those details, Hormaz. Now, the government is working to revise the base year of inflation and gross domestic product. Sources tell CNBC-TV18 that a decision is likely in the current calendar year. Prestige Estates has said it will seek approval to raise funds via qualified institutional placement during its board meet on Friday. The construction major stock fell on the news. The board will also explore monetization of assets in the hospitality segment. Remember, CNBC-TV18 had reported last week that Prestige Estates is seeking a valuation of 20,000 crore rupees through the IPO of its hospitality business. Hindustan Aeronautics will be meeting on the 26th of June to consider a final dividend payout for FY24. The company has already paid an interim dividend of 22 rupees per share, its highest in the last two years. Institutional Investor Advisory Services has opposed the reappointment of Gautam Singhania as chairman and MD of Raymond. In its note, the proxy advisory firm called for both Singhania and his estranged wife, Nawaz Modi, to be removed from their positions on the board until their divorce proceedings are resolved. The body also raised concerns about Singhania's proposed remuneration, deeming it excessive for the size of the business. But the big newsmaker this evening, a day after U.S. government filed a lawsuit against Adobe, the company's chairman and CEO Shantanu Narain spoke exclusively to CNBC-TV18. He termed the U.S. government's case as misguided and promised to fight it in court. The Biden administration sued Adobe for allegedly violating consumer protection laws with hidden termination fees. Adobe has denied all the charges. Speaking to Shireen Bhan at the Adobe headquarters, Narain said that the world has entered the era of artificial intelligence and acknowledged that it will be disruptive, while also adding that AI can be a massive enabler and tailwind. After a backlash, Adobe has clarified that it will not train its AI models from user content. Take a look.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts. And the reality is that it was the government's case is misguided. And so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
Meanwhile, tech giant Nvidia is now the world's most valuable company, beating Microsoft and Apple. Nvidia's $3.34 trillion market cap is nearly double of what it was at the start of 2024. The company had crossed the $1 trillion threshold last June. This is the first time a company other than Apple or Microsoft has held the top spot in the last 5 years. Here's interesting trivia. Only 6 nations in the world have a GDP higher than Nvidia's market cap. These are USA, China, Germany, Japan, India, and the United Kingdom. Here is Adobe Shantanu Narain on Nvidia CEO Jensen Huang's the meteoric rise of the company.
This is the shock and awe story of the last several years, what's gone on with Nvidia. I mean, what do you make of the kind of rise that we've seen of Nvidia?
Well, Jensen's a, absolute legend in the industry, and having known him for decades and considering him a friend, what I would say is that his ruthless, single-minded, drive to continue to deliver innovation. I mean, he has this vision of what he wanted to do with autonomous cars, and so I think this is not a one-hit wonder for Nvidia. I think it's decades of consistently looking around the corner and executing against it. So I could not be more happy for him.
And you can catch the entire conversation with Shantanu Narayan at 7:30 and 9:30 p.m. right here on CNBC TV18. Boeing's Chief Executive Officer Dave Calhoun faced sharp criticism in a Senate hearing, his first public appearance before Congress since taking over the top job at Boeing. In early 2020, in the hearing that went on for 2 hours, the Senate questioned Calhoun on the company's manufacturing shortcomings, accusing him of putting profit ahead of safety. Calhoun revealed that he hasn't directly spoken to any of the whistleblowers yet. The senator has also slammed the Boeing CEO for giving just 1% wage increase for its workers over 8 years.
You said you've listened to the whistleblowers. Have you directly spoken to any of the whistleblowers?
I have not directly spoken to any of the whistleblowers.
Do you think that'd be a good idea to do that?
Yeah, I think it would.
I'd recommend it.
Yep.
You've got 32,000 machinists. These are American workers who work for you. These are Boeing employees in the Pacific Northwest. You're in contract negotiations with them right now. 32,000, that's a lot of them. The last time that they got a contract was 16 years ago. Do you remember the terms of that contract?
I don't. It was a very long contract.
Yeah, well, they got 1% wage increases over 8 years. 1% over 8 years. You got a 45% increase just last year, and you're making $33 million. Do you think maybe these folks deserve a raise?
Oh, they will definitely get a raise.
Good. Good.
And back home, the GST Council will meet this Saturday for the first time since Lok Sabha elections. Industry sources tell CNBC TV18 that the council may consider quashing retro tax notices for certain sectors, including online gaming. Timsi Jaipuria is here with the exclusive details. Timsi, what are you picking up?
The GST Council is likely to get a breather for the industry where sectors which paid GST at lower rate versus that applied by GST authorities that are likely to get relief from the retrospective action. GST Council may consider a proposal to not to levy higher GST when lower rate was paid by the industry, and that was a general practice that the industry was carrying out and not just one particular company per se. So GST Council may consider Law Commission's proposal to offer companies relief from the retrospective action for lower tax payout. Council is likely to consider not raising retrospective demands where industry paid lower GST rate in absence of clarity or where the rate was not specifically mentioned in black and white. Also, the amendment to the GST law is likely to not to allow refund of GST or cess arising in cases where higher demands of GST were paid, and now with this amendment there could be a lower rate. So over there no refunds are going to get done, and the amended law is likely, what experts say, could benefit sectors like online gaming, insurance, when it comes to other sectors like foreign shipping lines, foreign airlines, insurance company, etc. So there are many sectors who are likely to get the benefit of this. Just to lay down the procedure, Council is going to introduce Section 11A in the GST laws, which is likely to address this issue. And this is similar to what was Section 11C in the pre-GST regime in the central excise laws. So just replicating that law to be exercised as and when sector-specific the council or the government feels that they would need to bring in amendment so that retrospective cases can be settled. So it is going to ease a lot of litigation, is what experts say.
Right, Timsy, many thanks for those details. Meanwhile, the Heavy Industries Ministry has set up a task force to formulate a new capital goods policy. Sources have said that emerging sectors like artificial intelligence, robotics are likely to get a leg up. Parikshit Luthra joins us now with the details. Parikshit, what are your sources telling you?
One of the first decisions taken by the NDA 3.0 government was to begin work on a new capital goods policy. Sources say the Ministry of Heavy Industries has formed a task force to work towards a National Capital Goods Policy 2025. This task force is headed by Secretary Heavy Industries and has 17 industry bodies and 15 ministries as members. One of the key objectives is to review the shortcomings in the Capital Goods Policy 2016 and work towards a framework that can make India a global champion in capital goods. The government is considering ways to include new and emerging areas in manufacturing like automation, robotics, AI and Internet of Things. One of the key priorities is to promote export-led growth and reduce import dependence, and also focus on niche technologies and high-end technologies in India. Industry sources say India needs a new outcome-oriented capital goods policy, as the earlier one has not been effective in demand generation and promoting exports. CNBC-TV18 has learned that industry bodies have recommended a new policy which puts emphasis on machinery used in energy transition, as energy transition is a $120 trillion opportunity. The industry also wants clarity on how the 1 lakh crore R&D corpus announced in the budget will be utilized for the capital goods industry. The industry has told the government that while the current share of capital goods in India's manufacturing is 12%, there is a strong potential to take it to 25%, and a focus on capital goods can increase India's manufacturing GDP overall, also exports. We would like to reduce heavy imports of capital goods or machinery used in manufacturing and become a key exporter. Currently, China is the largest exporter of capital goods, followed by Germany, US, Italy and Hong Kong.
All right, many thanks for those details, Parikshit. On that note, it is time for us to head into a short break. But coming up, North Korea rolls out the red carpet for Russian President Putin, who is visiting the country after 24 years. Details when we come back. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
These are businesses that have a great market position, in many cases are leaders in what they do. Some have been playing in smaller niches and we need to expand those. These are businesses that when we started this collectively had a market cap of less than $1 billion, and we set a target of each business to get to $1 billion. There are 10 of them. And as many got closer to it, as we often do, we raised that target further and said now we need to grow 5x. So the collective valuation of these businesses as of the last fiscal year is $4.2 billion now, and our target is to get to 17 to 20 billion from these growth gems that we have.
If pockets like banks, metals, pharma, FMCG have a lot of value and technical strength and can be bought even at current prices. I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent. Valuations are good. And the money is flowing in because people are coming out of a phase of underperformance. The likes of Power Grid, NTPC, NMDC, ONGC, SAIL, NALCO. I think all of these stocks have a lot of headroom on the upside and can be committed into even at current levels. But I think since a lot of underperforming stocks and sectors are making a comeback, I think fertilizer looks very interesting. Paper looks interesting. The entire auto ancillary space, looks very, very interesting. Sugar has made a very good comeback. Focus on these pockets and I think you will be rewarded with a very good risk reward. I think it's the kind of market where you don't need to apply your mind too much. All you need to do is just to control your emotions. I think that's the kind of bull market that we have been in for the last 6 to 8 months because every single dip has been bought into beautifully. Local and global developments have been handled wonderfully. And I think the market is as strong as ever. As a technician, I always look out for overbought signals or topping signals. But even at current levels of 23,500, I don't see any such signals on the charts. In fact, after what happened on June 4th, I do believe that the market is internally and structurally even more stronger. And I think we are going to see much better days ahead and the best is yet to come.
Welcome back. You're still with us on Business 360. A quick look at the national headlines. 15 people have reportedly died of heat stroke in Delhi NCR in the past 72 hours. While 5 of the victims were from Delhi, The remaining 10 were from Noida. The Indian Meteorological Department has forecast some reprieve from the heat tomorrow and day after. New Delhi continues to face a severe water shortage amid the scorching heat, forcing residents to stand in long queues to get water from tankers. Delhi's Water Minister Atishi has alleged that the Haryana government has refused to release water to Delhi despite multiple requests. Urging Prime Minister Modi to intervene, Atishi warned that she will sit on an indefinite fast from 21st of June if the issue remains unresolved.
हरियाणा सरकार दिल्ली वालों पर और दिल्ली वालों की जो परिस्थिति है, दिल्ली वालों का जो कष्ट है, उस पर मुझे लगता है हरियाणा सरकार को एक अपना 1.5% पानी देना चाहिए। हमने प्रधानमंत्री से अनुरोध किया है। मैं उम्मीद करती हूं कि प्रधानमंत्री जी भी इसमें कुछ करेंगे और अगर नहीं कर पाए तो फिर फ्राइडे से मैं अनशन पर बैठूंगी।
Meanwhile, Mumbai residents woke up to cloudy skies and heavy rains this morning. The Met Department has issued a yellow alert for today and tomorrow. The IMD has also issued a yellow alert for the neighbouring districts of Raigad and Ratnagiri till June 23rd. However, on a pan-India basis, the Met Department is anticipating below normal rainfall this month. Heavy rainfall in Assam, along with a rise in water levels in the Brahmaputra River, has led to floods and landslides in the state. Over 150,000 people across 15 districts have been impacted. According to the State Disaster Management Authority, at least 30 people have been killed. Karimganj district has been their worst affected. Former U.S. Congress Speaker Nancy Pelosi and other members of an American delegation met the Dalai Lama in Dharamshala today. China, which considers the Tibetan spiritual leader a dangerous separatist, has protested against the visit. Pelosi's visit comes after the U.S. House of Representatives voted in favor of a bill to push China to hold talks with Tibetan leaders and resolve the long-standing dispute.
His Holiness the Dalai Lama, with his message of knowledge and tradition and compassion and purity of soul and love, he will live a long time and his legacy will live forever. But to you, President of China, you'll be gone and nobody will give you credit for anything.
A report by the United Nations Human Rights Office has said that Israeli authorities are responsible for war crimes in Gaza. The report has also condemned crimes against humanity by Hamas and other armed groups. At least 17 people have been killed in refugee camps in the last 24 hours, according to Hamas officials. Red carpet, red roses, honor guards, and a massive crowd cheering Russian President Putin was greeted with a lavish welcome in Pyongyang on his first visit to North Korea in 24 years. The visit, emblematic of the deepening ties between Putin and Kim Jong-un, comes at a time when both are facing sanctions from Western democracies. One-on-one talks between the two leaders lasted for 2 hours. The countries have signed a comprehensive strategic partnership pact, which is set to include cooperation in healthcare, education, and science. Putin says the pact also has a provision of mutual assistance in the event of aggression against either of the nations. Kim Jong-un has pledged full support and solidarity for Russia's war with Ukraine. Putin thanked Kim for his support in their fight against the imperialist policy of the United States.
We highly appreciate your consistent and unwavering support for Russian policy, including the Ukrainian strand. I am referring to our fight against the hegemonic policy imposed for decades, the imperialist policy of the United States and its satellites against the Russian Federation.
India's Internet and Mobile Association has moved the Supreme Court against the government's new self-declaration portal for digital advertisements. This move comes a day after the government's self-certification portal went live following a Supreme Court order. Ashmit Kumar joins us now with all of those details. Ashmit, take us through what the association has told the court.
Well, let's begin with some context. It was on the May of 7th that while hearing the misleading advertisements case, specifically in the Patanjali matter, the Apex Court had passed directions that all advertisers need to submit their undertakings before a government portal. Now, it is following that direction that the MIB, the Ministry of Information and Broadcasting, had brought out its portal where self-declarations will have to be submitted by all advertisers, and that is what sparked concern. That portal went live yesterday. We understand that the industry has expressed a great deal of concern on how this can be implemented. In response to that, we find that at least one industry association, which is IAMAI, has already moved the apex court. The idea is to sensitize the court to the complexities of the impracticalities that may be involved in implementing such a mechanism, such a portal. Not just that, we understand that there are various other industry associations, such as the Indian Society of Advertisers, that are also contemplating similar action. Now, why this action? Why knocking on the doors of the apex court? Well, the concerns that various industry bodies have highlighted is that, one, this could be impractical. There were as many as 40 crore ads published in 2023. If there's a declaration required for every advertisement to be put out, that will put humongous strain on the MIB portal, that the MIB simply does not have the bandwidth. There were also questions asked as to whether this would lead to an increase in compliance burden, how that would unduly impact startups as well as small companies, how this could severely impact the ad economy, especially as far as the digital space is concerned, that this will come as a shock to the digital ad industry, and that there is a need to sensitize the court towards the difficulties being faced by the industry. This hearing, we understand, is due to happen in July of this year.
All right, Ashmit, many thanks for those details. Now, moving on, India has a long distance to cover in terms of helicopter penetration. That's the word coming in from Sunny Guglani, the head of Airbus Helicopters in South Asia. Speaking to my colleague Madiha Mujawar, during the launch of its H-145 helicopter, Guglani urged governments to use helicopters as a tool for nation building. Citing examples of North America and Western Europe, he said India must open new segments for helicopters like emergency health services, law enforcement and disaster management. Speaking about the company's partnership with the Tata Group to make the H-125 helicopter in India, Guglani said they aim to roll out the first helicopter from the India facility in 2026. Take a look.
270 helicopters on the civil and parapublic side in a country like India, it's very low. Oil and gas has always been our focus area. It will, of course, we will continue to keep focusing on it. Commercial air transportation, right? So charter operations, it's another big market. If you look at the new segments, heli ambulances, so we call it HEMS, Helicopter Emergency Medical Services. Yeah. That's a sector that we are really trying to work with the government and with the various stakeholders in the state governments as well to develop that.
And with that, it is a wrap on this edition of Business 360. But as we go, here's a quick note. A daily wrap of the top headlines will hit your inbox every day before you call it a night. CNBC TV18's daily newsletter on LinkedIn featuring the top 10 stories on markets, corporate updates, economic insights and financial highlights. So subscribe now and get the CNBC TV18 Edge. The news continues right here after this short break.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles.
Talk Money.
Hello and welcome to another edition of Let's Talk Money with me, Surabhi Upadhyay. Now, quant funds have been in news of late, and they have been in focus on the back of standout returns over the last couple of years. But there remains quite a bit of uncertainty in investors' minds over how these funds exactly function. So what is quant investing all about? Well, Harish Krishnan, Co-Chief Investment Officer at Aditya Birla Sun Life Mutual Fund, is joining me on the show to help us decipher these type of funds and the mysteries that surround them. Harish, great to have you with us for this conversation. Really appreciate you taking out the time, in your busy schedule to be with us in person. But really tell us, quant has become the new buzzword. I think a lot of fund houses want to launch these funds. There are certain PMS strategies on quant. So, we really want to do a classroom 101 on what is quant investing.
Sure. Quant investing stands for quantitative investing. It's a short form. Basically, while there are a certain amount of positives that human beings as fund managers bring in, notably, if you look at from an Indian point of view, it's generally that Indian fund managers have generally avoided bad companies. So if you look at any mutual fund portfolio, in the markets, maybe out of 5,000 companies, 5-10% of companies die every year, which fall, say, 70, 80, 90% and never recover. You don't generally see those in the form of, say, mutual fund holdings. There's a certain amount of diligence that comes through that human beings bring in. But human beings also bring in a certain set of biases, right? And, we all know that we shouldn't be biased, we should be logical, etc. But the reality is, in the heat of the moment, we do take decisions which are not the most unbiased decision.
Most mathematical of decisions, let's say.
That's right. And if you look at, between buying and selling, at the time of buying, there are multiple frameworks in which we can offset many of these biases. You can look at valuation parameters, you can look at catalysts that can come through in the next 12, 18 months, etc. But when it comes to selling, the selling decision exposes all our biases. Because technically, selling you do only for two reasons. Okay, one is either a selling induces a regret that you're selling too early or you're selling too late. It is same whether it is a retail investor or is it a professional money manager. And therefore, you don't get a very optimal kind of a decision making because of these biases. Now, if I were to flip the other side and I look at machines and, with all these advancements that are happening, can machines predict the innate greed and fear of markets? Possibly not. But there is a certain method in the madness that machines bring in, which is more importantly that they are unbiased. So rules can be created which are very clearly in terms of buying, holding and selling. This reduces the emotional aspect of taking that decision, which then results in more logical decision making. The negative of machines is, of course, in some sense, it's garbage in, garbage out. Machines really don't have the diligence to know which is a manipulated company, which is a good company, which is where you want to give a lot more time and capital to over a long periods of time.
Who knows? Maybe that changes with artificial intelligence, the rate at which things going. Maybe perceptive machines and computers that can even figure out some of these issues.
The reality is the moment you make any rule known, okay, there is enough incentive for other people to game that particular system, right? And therefore, yes, for sure there will be advancements in which we can try and reduce some of these biases, but we'll never get the diligence that a human fund manager brings in terms of ability to understand the softer aspect of a promoter, in terms of ability to judge whether this is genuinely a turnaround that's going to happen. Machines will invariably not be able to get that. So therefore, when we look at quant, okay, one approach is we can go purely by machines. Which is, you can run a whole run a formula. Now, the way the formulas got designed is, typically when you look at any particular portfolio, the way you look at it is in the guise of sectors. How much is in IT, how much is in banking, how much is in pharma, etc. And for rightful reasons, because you believe that stocks in a particular sector tend to move together. And therefore, it makes a lot more logical sense to look at it. Now, in the 90s, there were a couple of researchers in US, Pharma and French, who got subsequently the Nobel Prize for this work, which was basically that there are other dimensions also in which you can look at markets and portfolios, which can give differentiated return risk compared to the market factor, right? And they came up with what is called the factors. One of the factors that they came up was the value factor, which is companies which are cheap on certain quantitative parameters tend to perform differently from the market. Again, it doesn't mean it'll outperform, underperform. That was never their call. It's just that if you own the market, you get a particular risk reward. Owning this particular kind of a factor gives you a differential risk reward perspective than owning the market. Subsequently, other factors came in by these two gentlemen, which were primarily the size factor, which is companies which are smaller tend to have a different risk reward. Then came the low volatility factor, which is companies which have exhibited lower volatility in the past tend to be appreciated differently. Right? And then there was a quality factor. And then in 1993, there was an Indian called Narasimhan Jagdish and Titman, an American researcher, which came through this factor called the momentum factor. The momentum factor is basically what we see in sports, which is that, the form of a particular player extends possibly to the next match, and then it eventually dies out, right? So the momentum factor basically stays, as far as stocks is concerned, is that the past winners tend to do better than in the future. And so therefore there is a certain signal or a certain persistence of that that extends for, say, the next 1 month, 2 months, 3 months, and then it dies down. So the way machines look at it is not in the form of sectors, but they look at it factors, and rules can be created on the basis of those factors.
So this is really, important because we're going down to the absolute DNA, the building blocks of how some of these investing strategies work. You mentioned factors. And, now these factors, whether it is quality or momentum, I consider them as like filters through which you can segregate a bunch of companies or a bunch of stocks. Now, the thing is that there are indices also based on these factors. Now, here in India, right, you could have a momentum, momentum 50 or a quality 30, etc. And you have passive funds then that mirror these indices. It's called factor investing, for our viewers, in case you're interested, or smart beta investing. So there's the passive element to it. But again, coming back to our subject at hand today, which is quant funds are not passive funds, right?
That's right. So there is, like I said, with passive funds, not all of them, but sometimes, you do get an odd stock that you may not be very comfortable with in terms of, what kind of a name is coming into a rule. Because everything is a mathematical rule. And any stock, for example, momentum is primarily looking at price action. Now, you could have a bankrupt company also seeing a very healthy price action as been the case. Now, ideally, would you want to really park your capital in those kind of things just because it is showing up in one such screener or filter, like you said? And that is where the human involvement starts coming in. So it doesn't mean that you cherry pick which are the ones that you don't want to.
Because then it becomes active.
Then it becomes active, right? So, but you create rules basis the past experience of human beings to try and avoid them as rules. Except that it is not coming from the machine. It's a different set of rules. All Quant is saying is it has to be rule based so that there are no biases. So you use the intuition of human beings, our experience of the last 15, 20, 30 years as to where we have technically gone wrong more often than not. And you avoid those black holes wherein typically machines can get terribly wrong.
So quant to me is sounding like a sweet spot in between pure active management and just passive investing, which is simply mirroring an index. It's kind of bringing the best of both together, because there are still rules. While there is human intelligence of a fund manager that's at work, there are still some rules. We have some questions coming in as well, fundamental questions on quant investing. So let me quickly get to our viewer. I think we have Anubha with us on the phone line. Anubha, hi. Welcome to Let's Talk Money. What's your question?
Hi, I'm Anubha Rao. As a retail investor, how do I differentiate between quant funds, as they have very complex methodologies that I may not have the means and the knowledge to understand?
Excellent question, Anuva. And I think, I don't know how many people ask this question before investing, but it's a very good question, right? Because now in passives, this is the underlying index, this is how this fund is supposed to function. What about quant strategies?
So ideally, a quant strategy which is transparent and gives across its processes, because there are only basically 4 decisions that any fund takes. What it buys, what it sells, how much it weighs, and how often do you run the same process again and again. So these are the only 4 things that anybody has to really pay attention to. Be it in an active fund also, you do focus on these 4 decisions. It's just that it is masked by a human fund manager who provides these answers. So as long as there is a product which explains how each of these 4 decisions are done and lays it out to you, you get a broad sense as to what the process being followed out here, right? Which may apply to say maybe 90-95% of all use cases. There'll always be some use cases where because of the benefit of the fund manager, there will be some interventions, if you may. It's like saying that, you know, if I talk about aviation, and that's a great example of man-machine collaboration. It might surprise you and your viewers that in a typical flight of 72 minutes, not more than 3 minutes actually the pilot is manually controlling. The rest of the time is autopilot. And yet, you know, none of us would be comfortable in going into a plane without a pilot. There are certain edge cases, there are certain use cases where the machines can freeze, when they can get overwhelmed by conflicting data, so much amount of data. That is where the expertise of the pilot or the human fund manager comes in to handle these turbulences so that the machine doesn't get overwhelmed. Right? So therefore, you need to get a sense of both the rules of these 4 decisions, which are reasonably straightforward.
Buying, selling,
weighing,
the weightage of stocks in the portfolio, and the churn.
And the churn, and how often do you keep doing the same process. It's not very complicated. And therefore, once you get these 4, and what is the level of confidence that you have on the pilot? Who's going to intervene, and when are they likely to intervene, then you have a reasonably simple way of understanding how one...
I think that's a great analogy. So know the pilot, try and understand the flight path, and then you can perhaps board the flight. So, you know, very quickly, Harish, I'm given to understand, I think right now, if you put all quant funds in India together, I think the total assets under management may be around 6,000 crores. Would that be right?
That's right.
Typically, as of now, and this is a newer industry, right? I think just 3-4 years old. So which are the major filters or factors that most quant funds in the market are deploying or employing? I mean, strategies could be different, but what are some of the key pillars on which these strategies are resting today?
Right. So almost everyone focuses on any of these 5 factors that I laid out, which is primarily you've got value factor, size, you've got volatility or low volatility as a factor, you've got quality as a factor, and then you've got momentum as a factor. So it's a mix and match. Now, the point is, it is not about how much you are weighing, 25% to this factor, 30% to this factor. It is like a recipe, right? Even if I tell you that, you know, a dish has these 5 things, the reality is how these 5 are and in what stage do you include each of them matters a lot more than just providing you a cheat sheet saying that, okay, you have to take 1 teaspoon of this, 5 teaspoons of this. Still, you may get a very different dish. You know, if you try it at home, which is why like I said, if you focus on those 4 decisions, okay, buy, sell, weighing, and rebalance through the lens of any of these factors, okay, you will broadly get the answer as to how the dish is finally going to get cooked. Okay. Now, of course, in the hands of a chef, it might get cooked slightly differently. Okay, that is the human element that comes through it. But it's not going to be chalk and cheese. It's not that you're going to set up making some paneer and you get something else altogether. Right? So,
I'm loving the analogies here as well. I think they're really simplifying the whole concept of quant funds and how one should look at them. You know, we have to take a quick break, but after the break, so Aditya Birla Sun Life is also now, you know, setting up their own quant fund. And since we have you here, I want to understand the strategy, your own thought process when you're going to apply some of these, you know, rules to work. So take a break and come right back. The conversation will continue.
Let's talk money.
Factor today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Let's talk money.
Welcome back to today's edition of Let's Talk Money, and this week we are demystifying the world of quant investing and quant funds. Now we've discussed, of course, how these funds are set up, what are the factors that go into these funds, and how their basic construct works. Harish, I have to ask you this question: the returns, right? At the end of the day, everybody wants to get some reasonable idea of how such funds perform. I mean, and sort of what's the motivation? Why should I opt for a quant fund versus a regular diversified fund, which is supposed to give me at least, like, let's say, 12 to 15%, depending on the year?
Sure. So I think you made an interesting point of active and passive, right? Active funds have active proprietary insights, but very poor repeatability, in the sense that when a similar circumstance is coming, will you be reasonably sure that you will get a similar outcome is not necessarily what an active manager generally gives. A passive, on the other hand, has got no proprietary insight. It's all basis public knowledge, right? But it has got very high repeatability. Quant strategies, on the other hand, have active insights. We don't have to let the whole world know what exactly we are doing. While we give a sense of what those 4 decisions are, we are not going to say that in June there's going to be so-and-so rebalance, right? More importantly, it gets you that repeatability. So the reason why you want to be into quant funds is more for the repeatability aspect along with that active insight. Now, coming to your point as to, what are the returns one can generate, etc. Now, the passive factors, of course, have generated reasonable amount of returns from a risk-adjusted basis, etc. Right? Momentum is a very popular factor that's done exceedingly well in India as well as the rest of the world. We've generally seen alphas which are more like 4-5% over, say, the traditional markets over, say, 3-5 year kind of cycles that have come through here. Because essentially,
so this is a 3-4% alpha outperformance over the benchmark, you're saying?
Over the market, over the broader market. Please remember that when we talk about factors, we are basically talking about a niche in the market. If we own the market, we'll get the market factor, market return, right? We are essentially either looking at momentum or volatility. These are all niches in the market, right? And depending on how you therefore blend in that recipe, you get in a certain amount of repeatable kind of a return. There is no free lunch. It doesn't mean that, adopting a particular factor or a particular strategy will keep giving you alpha every time. If that was the case, nobody will be in the market. Everybody will be in that. So these are niche products, but then they've generally seen that they've given these kind of returns over a reasonable amount of periods in the past.
Okay, now you tell us which one of these 5 factors do you like the most? And when you are setting up, the quant fund that you'll be managing, then what's the thought process? What's the strategy there?
Right. So our starting point is basically the top 75 positions in each of the fund houses, right? So like I said, human fund managers are very good at avoiding bad companies. And that is one area where machines typically can go astray in terms of getting confused as to where to harvest the signal, right? But in the top 75 positions of every fund house is generally the most high conviction bets that you have. The top 75 positions in a fund house account for roughly 80% of AUM. So therefore, you have a very good, solid superset. So if at this point of time, if I were to talk the top 75 Birla, top 75 Axis, Kotak, etc., and you create a whole superset, we are talking about 240 names. Right?
So a lot of overlaps, I'm guessing.
There are a lot of overlaps. There are some unique names.
Fund houses everybody wants to own the good company.
Yes,
right?
and there are some unique names, etc. So from there, we are basically avoiding the small cap. So this is primarily a large and mid cap kind of a product offering that we are doing. Over there, we are primarily looking at three factors. We are looking at the quality factor, we are looking at the momentum factor, and we are weighing it by low volatility. Right? So these are the three factors that we are blending it at this point of time, which is primarily looking at the momentum signal, in a very high quality universe, because this has all come from the might of the wisdom of the fund managers in India, which are all wanting to create alpha in their respective funds. And therefore, they're putting some of their best names out there, and where the chance of going terribly wrong are very little, right? And over there, we're taking the momentum factor, and the names that are coming through, we are weighing it on the basis of lower volatility. So if you think from a cricketing analogy, right, we want to create a World Cup team for T20, and now it's the World Cup season. One option could be that, I can pick up a signal of, say, 2 or 3 different statistics, formulas, if you will, from all the 5,000 players. And then I assemble a team of whatever, 20, 30, 40 players, and then play their matches. The other could be that I pick only from the IPL teams, which is what we are trying to do. We are buying it from the mutual fund. Within that IPL team also, we have certain set of players who play almost all 80% matches. Some are just, impact players, substitutes, etc. We want to see players who have performed in most of the pitches. From there, we are looking at the form in IPL, which is the momentum factor, which is the past form. And we are trying to arrive at something wherein we are looking at forward expectations of earnings, etc. to arrive at a superset of names, wherein we are weighing it on the basis of long-term consistency. More the consistent a player, the higher the weightage you give, or lower the volatility, which is another word for consistency, you give higher the weightage and vice versa. So it's not very different from what we do in everyday life. It's just that there is a particular rule to which...
There's a sort of a method to it.
There is a method to the madness of this quant fund.
Got it. So you're looking for a very, very sort of high quality stocks which have momentum and yet are going to be low on volatility.
That's right.
Okay, so it sounds like the holy grail, right? And then that's what you're going after. Pretty interesting. So just to go back in terms of how investors should approach such quant funds, whether it's yours or any other fund houses, in terms of the overall portfolio, what place should quant funds find in the portfolio in terms of as a percentage maybe, or how do you blend it in with your overall portfolio?
So, see, quant funds, like you said, you're trying to demystify it. Today, it occupies a very niche or a fringe position in most portfolios. We would think that it should come more and more into the core of the portfolio. And that can only come when we give away our recipe book, and which is what we are saying, that this is the steps that we are following in terms of each of these 4 parameters, right? And that should give confidence that we are not going to get a very bad name or a very bad experience, so that people can allocate more and more. We are talking about large and mid cap offering a very large space in already people's portfolios. This is just going to be a bottom-up, benchmark agnostic fund offering out there. So we would think that people can come in with a lot of core allocation into this kind of a category once they begin to understand the nuances of how exactly the portfolio is getting constructed. The one thing that we would say is that because this is a niche from the market, on a daily basis, you are having a very different portfolio from the market portfolio. So here, what we call the active share, which is how different is your portfolio from the benchmark, will be as high as 80-90% different from the benchmark. So this is going to be very different from any of the other funds that you any which case own. Right? So this brings in a diversification benefit, which may not be there in other funds. So this is not a me too product, but even if it is selecting from the core large and mid cap, which is there in every other fund house, from there only we are picking up, the weights and the way in which we are selecting it will make it a very differentiated portfolio.
Compared to the benchmark.
Compared to the benchmark.
So just simple analysis on, okay, this is the benchmark, how much is the fund returning over the benchmark may not be the right
way
analysis.
to look at it. More importantly, you need to give it 3-5 years. See, even with the selection framework that I explained, say a World Cup match, it's not that, India will keep winning every match. There'll be matches where we'll be 36 all out. There'll be matches where we score really well, right? But when we score a 36 all out, the process will tell you what exactly has to change and how it will change, how the portfolios will change, so that we get more of those cases where we start winning. That's really, in simple terms, how quant investing works.
Harish, it's been a really helpful conversation. Thank you so much, because quant investing is the new frontier. It is a more evolved way of investing than what perhaps the industry has been sort of putting forth till now. So we're looking forward to more conversations and to understand how these funds evolve and shape up as well. So good luck to you and, of course, all the fund managers out there who are trying all these new strategies. May the investor always win.
Thank you so much.
Thank you so much. Well, with that, we're out of time on this episode of Let's Talk Money. Keep sending us your feedback, your comments, queries. See you again next week.
Let's talk money. Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
These are businesses that have a great market position. In many cases are leaders in what they do. Some have been playing in smaller niches and we need to expand those. These are businesses that when we started this, collectively had a market cap of less than $1 billion, and we set a target of each business to get to $1 billion. There are 10 of them. And as many got closer to it, as we often do, we raised that target further and said, now we need to grow 5x. So the collective valuation of these businesses as of the last fiscal year is $4.2 billion now. And our target is to get to 17 to 20 billion from these growth gems that we have.
If pockets like banks, metals, pharma, FMCG have a lot of value and technical strength and can be bought even at current prices. I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent, valuations are good, and the money is flowing in because people are coming out of a phase of underperformance. The likes of Power Grid, NTPC, NMDC, ONGC, SAIL, NALCO, I think all of these stocks have a lot of headroom on the upside and can be committed into even at current levels. But I think since a lot of...
Hello and welcome to News Center. I am Ashmit Kumar. Now, India's Internet and Mobile Association has moved the Supreme Court against the government's new self-declaration portal for digital advertisements and for advertisements as a whole. They have said that the government's mandate could have severe impact on the ad ecosystem. This move comes a day after the government's self-certification portal went live following a Supreme Court order. The advertisers have slammed this move as a one-size-fits-all approach and claim that the rules for television are being force-fitted onto the digital ecosystem. The self-declaration portal was launched by the Ministry of Information and Broadcasting for advertisers to upload self-declarations against misleading advertisements. Now this, after the Supreme Court, while hearing the Patanjali case, has expressed concern about misleading advertisements duping customers. The Apex Court had directed on May 7th that no ad will be published across all mediums without the advertisers submitting an undertaking against misleading ads in the form of this self-declaration on the government portal. Now, following the court's direction, the government issued guidelines and an advisory for the portal that went live yesterday. And well, joining us now to discuss this further, we have with us Aparajita Bharti, co-founder of the Quantum Hub, and Stella Joseph, partner at the Economic Laws Practice. Thank you so much for joining us, Ms. Bharti. Let me come to you now. The broad message that the government, as well as more importantly, the Apex Court is putting out is that, look, we just don't want misleading advertisements. There needs to be some accountability. And as a part of that, at least on the face of it, this looks quite innocent, this mechanism, that advertisers are required to give an undertaking before they put out the ad that, look, there is no misleading content in our advertisement. The industry, however, has used words such as compliance burden, hampering growth, force-fitted onto the digital ecosystem, that this will come as a shock to the ecosystem. I just want to get an understanding from you as to why the industry is concerned about this portal for self-declaration.
Thanks, Ashmit, and you're absolutely right. I think the intention here is clear that there should not be any misleading advertisements. But I think just the way in which the court has directed the government to implement this intention is something which is very problematic when it comes to ease of doing business. Now, imagine as a citizen, if you have to wake up every day and say that, hey, I'm not a criminal, right? Instead of somebody flagging you that, you have done something wrong and therefore the law should apply to you. This is how we are actually thinking of when we are looking at self-declaration certificate by each and every advertiser. Every business, no matter what size, what scale, even if it is a one-person business, for example, my mom is a home chef. If a lady runs a coaching center, even if you run a one-person shop, you do advertising in some form. And in fact, digital advertising is one of the cheapest ways to do it. So force-fitting rules that apply to broadcast media to digital advertising is something which doesn't make sense a lot from an operational point of view, because operationally they are very different. The volume and the frequency of such ads is also very different.
Sure. It's a very interesting point that you make in terms of the impact that this will have on startups, on smaller businesses. We'll come to that and we'll address that point in just a bit. Let me go across to Ms. Joseph. Ms. Joseph, thank you so much for joining us. The first question to you, that as far as the Supreme Court's May 7th order, where it said that, look, we want a portal where all advertisers will be required to undertake that there is no misleading content in our advertisement, that is grounded in Rule 7 of the Cable TV Network rules. Now, these rules have been in effect for a better part of the last 20, 30 years. The question that I want to ask is that why is there now a concern being expressed by advertisers at this point? Shouldn't they have been comfortable with this mechanism going forward that, look, there is already a rule in place for the last 30 years?
Sure. Thanks, Ashmit, for having me. So, look, while you're right that the rule existed for a very long time, but the manner in which the Supreme Court has actually mandated this self-declaration is something that is absolutely new. This mechanism was not envisaged in the Rule 7 that existed as on date. And this entire concept of self-declaration is something that has never been in place. The Rule 7 simply lays down that advertisements need to comply with certain guidelines. They need to be not obscene, compliant with normal moral codes and ethics, etc. But it does not have a mechanism self-declaration, which has now been introduced. So that is where the challenge lies, and that is where everybody is up in arms in terms of